ಗುಡ್ ಮಾರ್ನಿಂಗ್. ಹೇಗಿದ್ದೀರಾ? ನಿನ್ನೆವರೆಗೂ ಚೆನ್ನಾಗಿದ್ದೀವಿ ಸರ್. ಇವತ್ತು ಹಾ, ಇಲ್ಲಿವರೆಗೂ ಗಂಟೆ ಚೆನ್ನಾಗಿದ್ದೆ. ಯಾಕಂದ್ರೆ ಫೆಬ್ 14 ಇತ್ತಲ್ಲ ಅದಕ್ಕೆ. ಸೊ ಟುಡೇ ವಿ ಆರ್ ಮೀಟಿಂಗ್ ಹಿಯರ್ ಫಾರ್ ದ ಪರ್ಪಸ್ ಆಫ್ mainly the marathon, CA Intermediate Law Marathon, followed by CA Intermediate Audit. Again, we are planning this for 3 days, around 20 hours. Again, the audit is also goes the similar way, 20 hours. So what are we going to do here in this? The main purpose is we will mainly discuss mainly concepts which is exam oriented. So I have analyzed everything, even with the help of all the previous attempts also. The highest probability areas are mainly highly discussed here, and which are less probability area that will be left out for you for reading. Along with the concepts, for example, if we discuss chapter 1, then we will go for question bank also. So we have a question bank which is consisting of questions from May 23 RTP, MTP and previous year paper till May 26. May 26 MTP has come, not the question paper. So even in, RTP has come, MTP has also come, where I have added that also. So after that you will be having some homeworks. So if you follow that up, then you are good to go for examination, provided you do 1 or 2 revisions after the marathon classes. So before going further, we will see how the chapters are being tested in the examination in the last few attempts. Generally, I tell you take from May 23 examination, because there is a change of syllabus in May 23. From May 23 there is a change of syllabus. So even if you look from May 23, you know chapter order, right? I don't want to, like, if I come here again the chapter will goes away. In the May 23 attempt, chapter 1, that is preliminary, asked for 5 marks. And again in the November 23 it is being asked for 14 marks. And later it stopped. This 6.3 average is based on entirely from May 18. So you don't consider this average part. This is not accurate. So again, if you look at the chapter 2, first 3 attempts, nothing. 4 attempts, then they asked 7 marks, then they asked 5 marks. Then 0, then they asked 5 marks. That means on an average, it is having an weightage of 5 marks in the examination. What is this chapter? Incorporation related part, MOA, AOA, all those things. Then comes third chapter, that is Prospectus. That is being asked in May 23 for 5 marks. Then the 0, 2, 5, 7, 10, 5, 5. Still I consider it as an average of 5 to 6 marks in the examination. 6, maybe you can consider it as 7 also, 5 to 7 on an average. Then comes which chapter? Share capital and debentures. That is having an weightage of consider 11, 10, 15, 12, 7, 6, 10. Around 10 marks is the average weightage of this chapter. Then comes which chapter? Deposit. This is also having, if you look at the last 3 attempts, it is having 5 marks weightage, and in the last attempt they asked 10 marks. So on an average we can, that last also 11 is there, again 2 is there, 2 low is also there, too much up to 10 is also, 11 is also there. So we can consider it as 5 to 7 marks also from this chapter again. Next one is charges. It is actually a small chapter, sometimes they ignore also without asking. But if you look at the chapters, the share capital, compulsory a question is there, maybe a single question or maybe 2 questions. This charges also compulsory a question is there. The marks are varies, but if you look at the charges, it is an alternative attempt basis. in the current attempt, if it is asked, in the next attempt, it will not be asked. Sir, it is asked in the September 20, Jan 26, in May 26, it will not come. Definitely it will come. I did the same thing. I think I shared my FR paper story that when I wrote in November 24, May 24, I did not study the CSR activities. CSR also some accounting part is there. The law, it is there in law also, it is there in FR also, financial reporting. So I thought, who is going to ask theory concepts in account subject, FR subject? Then I did not study. I went to the examination, 10 marks question. Theory only. That we did not study. Then again, big loss. Then November 24, again I went to FR, thinking that okay, why it should not be asked. It is already asked in May 24. CSR will not come in the examination. Went to the examination, 8 marks question. CSR. But I studied and went. So you don't consider that because it is an alternate attempt basis, it will come in the current attempt, not in the next attempt. No. ICA can play anything with you. Be ready. So it is also on an average of 5 marks only. Once it is asked 15 marks, but that is an extreme situation. Except that it is average 5 marks only. The next chapter is biggest chapter, but so much of injustice in the last attempt, that is only 5 marks. It is having an average weightage of around 10 to 12, 13 marks. 12, 13 marks. Because if you see, I have taken only for 101 marks paper. Only descriptive part paper I am taking, considering. Not the MCQ part. So again, next chapter is, so it consider 12, 13, 10, 10, 10, 6, 5, around 10, minimum 10 marks weightage is there. You keep it and go ahead. Then dividend 5 marks weightage. Simple chapter, and again you can easily manage that even without putting so much efforts into it. The next one is accounts. You can consider it as 8 to 12 marks weightage. In the last two attempts, I don't know why they reduced, but it is around 8-10 marks that will come. Auditor also, actually auditors weightage they have reduced it. That is also around 7-8 marks. 7 to 8 marks you can put it on an average. Then comes this is I think a foreign company. Companies incorporated outside India, that is getting more importance now. 9, 11, 5, around 7 marks weightage is there, 7-8 marks. Then comes LLP, right? LLP around 12 marks weightage, around 12 marks. Here 10, 16, 12, 14, 7, 15, 12 marks minimum they will test. Then again GCA 8 marks, fixed they'll come 8 marks. iOS also should come for 8 marks only, but I don't know, maybe MCQ case study they might have tested. That is also 8 marks. Then FEMA 10 marks minimum to minimum will come. It can go up to 15 marks, 10 to 15. So this is the projected part. Around 5 marks, 5 marks, 5 marks. It is 10 marks, around 101 marks that is being tested. Based on this only, we are going to put a bit extra efforts for the weighted chapter and bit less efforts for the non-weighted chapters. So by telling, if you look at the material, that is summary notes, freshly prepared for you people. So which consisting of again the same 15 chapters. Please open the material. You have tomorrow you can bring the printout. So it is totally of around, if you leave out the spaces, there are some spacing issues at the end of the chapter, because if this is the entire page, if this is completed here, the entire page has been left blank. So if you put it on a net effective basis, it is around only 110 pages. That's it, not 135 pages. So entire syllabus, entirely from conceptual angle, because MCQs are tested on concepts, and again based on descriptive angle, it is entirely there. So you're ready? Shall we begin the race? As we know, what is the weightage for chapter 1? 0. It does not mean that they'll not ask. So we will put lesser effort here. So, and it consists of very non-weighted items only. The first chapter is a preliminary. The very important part which we are going to discuss in the chapter 1 is the definition of company. What is company? So if you can remember, one more thing is, if you can remember the perfect section for the perfect answer, same answer, then you can quote it in the examination. If you don't know, sir, I feel, I guess, no, don't guess. They'll guess your future. Don't take that risk. So directly, as per the provisions of Companies Act 2013, you go ahead and write the answer. You know the direct actual provision, then you write it. But I expect you to remember few section numbers and subsection numbers also. Mainly section 2 class 20. Very important, and without this it is like a founding stone for the CA intermediate law. So what is company? Company means a company which is incorporated under this act or any other previous company law. What do you mean by this act? We are discussing which act? Companies Act 2013. That means whether it is registered under 2013 Act or 1956, 1908, any other act. So it is called as company. Company incorporated under Companies Act 2013 or any previous company law. It is not just any previous law, it is any previous company law. Because previous laws are Income Tax Act 1961 is there, GST Act is also there, PF Act is there, ESI Act is there, Gratuity Act is there. No, I'm not talking about any other previous company, any other previous law, it is any other previous company law specifically. Now the features of the company I did not keep it because that is studied in CA Foundation also, separate legal entity, limited liability, that is not going to be tested here also. So directly I am going for one important definition, that is private company, because one 5 marks question sometimes they test it on a case study basis. I think we have discussed that in the class also, that number of directors are this many, and ex-employees, employees, joint shareholders are also there, other members are also there. So what is private company? Private company means there are 3 conditions that has to be compulsorily written in a important document called as AOA, Articles of Association. If the 3 conditions are mentioned in Articles of Association, then we call that as a private company. Sir, we are satisfying all the conditions, but we did not mention those conditions in AOA. Then you are not getting a status of private company. To get a status, that has to be compulsorily written in AOA. So a company by which its articles, that means if you are talking about you as a private company, in your articles means AOA, you have to mention that first point. See here I have given it as pointer form. You don't use these pointers, you use it as 1, 2, 3 numbers, better thing. So restrict the right to transfer its shares. See, it is not telling, okay, how many members are required for a private company? 2 members. Maximum is 200. Consider there 5 people are there, started private company. Now there is one person who want to go out of the private company. Can he sell the share to the 6th person and go out of the company? Yes, with the consent of all the parties. Because whenever you want to transfer your shares, there is a restriction. Sir, what is that restriction? See, the private company concept has come because of the close persons can do the business. For example, me, my brother, my family members are my friends. But when you are bringing some stranger to the company, first of all, you should get the consent of us. If it is a public company, I don't have any problem because it is related to the public. You can do anything. Because it is private company, you take the approval, or we call it as consent of all the remaining members. So there is a restriction with respect to transfer of its shares from person to person. First you ask the other existing members, I am going out of the company, you want to buy my shares? Yes, then sell it to them only. They'll have the ownership. They don't want to dilute the ownership. That is the first thing. Second thing is, it prohibits any invitation to the public to subscribe for any of the securities. Sir, when I say any of the securities, mainly I am talking about IPO or FPO. Or OFS. 3 types of public offers are there. We will discuss in chapter 3, shares and debentures. So IPO, FPO or OFS, initial public offer, further public offer, and offer for sale of securities. So a private company cannot issue because it is private. It has to be there in the private hands only. It can't go for public. So it is not restricting. It is prohibiting. Compulsorily on 0. It is with the consent also, without the consent also, with the consent of Supreme Court also. It is not available. Because law is final. Supreme Court is allowed to read the law, but not make the law. So that is why if you want to add public or issue the shares to the public, first go and amend the law, then you can issue it to the public. So it prohibits any invitation to the public to subscribe any of its securities. Then the third point is, it limits the number of members to 200. We know that the maximum number of members is 200, except in case of OPC, because one person company says that minimum is also 1, maximum is also 1. Except in case of OPC, limit the number of members to 200, and whenever you are counting the 200, you exclude employees also, and you exclude ex-employees also. Employees and ex-employees are what? Not counted. Ex-employees and ex-employees are not counted. But there is one more point here that is not given here. What is that point? Joint shareholders are considered as one. Consider husband and wife are holding 2 shares. Even though there are 2 shares or 2 members, they still consider it as a single member holding 2 shares. It is like you opened a joint account when you were a minor with your parents. It is still one account only, but 2 persons. Here also it is considered as a single member for the purpose of company. This is called as private company. Sir, how do we write it? I think I already discussed the presentation part. If you want, I even have uploaded that video also, presentation part. You go through it. First we write the provision part, then we write the facts, then we go for conclusion, PFC format. So what is the provision? When the company, private company related question is being asked, you start writing that a private company is a company by which its articles restrict the right to transfer the shares. First point, prohibits the invitation to the issue of shares to the public. Then third one is, except in case of OPC, limits the number of members to 200. However, while counting 200, members are employees are not considered, ex-employees are not counted, and joint shareholders are treated as a single shareholder. This is a provision part. Then facts, whatever the question is given, directors are this many, you just add it. And the conclusion, by applying the above provisions, in the given case, the company is a private company, or need to reduce the number of members, don't need to reduce the members. You can write as per the question, which we have in a question bank. Then comes, I did not give a public company because public company is other than private company. I don't want to discuss, and that is not tested area also. Then comes, you remember this 268, section 268, that is important. Then government company. Government company. 245. 245. Sir, what is government company? Government company is a company in which, look at the language, not more than, it is more than or equal to 51% of the paid up share capital is held by government group. I call it as either it is central government alone, or state government alone can hold it, or central plus state, or state plus state. Any combination can hold more than or equal to 51%. And the government company also includes a subsidiary of such government company is also government company. For example, Karnataka government is there and Maharashtra government is there. There is A Limited, in which Karnataka is holding 60% and Maharashtra is holding 20%. Is this A Limited called as government company? Because more than or equal to 51 is held by government, state plus state, any combination. So 60 plus 20, 80. Now A Limited is there, that is holding 50.5% in B Limited. Now you tell me, is B Limited a government company considering Karnataka and Maharashtra government? Because government is not directly holding anything. So if you want to become a government company, government should hold more than or equal to 15%. They again gave that government company also includes something called as subsidiary of such company. What is subsidiary company? We are going to discuss the definition again. Generally, we know that where more than 50% shares are held by other company, then you are called as subsidiary company, other company is called as holding company. Here, if by looking into this, 50.5 is more than 50. That means B and A are subsidiary holding companies. Yes, I agree. When there is no presence of this, it is considered as holding and subsidiary only. Because A is a holding company and B is a subsidiary company, because A has a status of government company, that B also will get the status of government company. Subsidiary of government company will also become the government company, even though government is not holding anything directly in that subsidiary company. Sir, you don't take 51% criteria for here. 51% criteria is there only for this part, because government company has 51% criteria, but when it comes to subsidiary company, it is having only 50% criteria, more than 50% criteria, holding and subsidiary. Understood the difference? Then comes small company. What is small company? A company which is small is called a small company. 285. Again, you have to remember what is important from examination. I gave only those things, nothing else. So a company other than public company, because what happened? A company which is other than public company, because small company is a branch of private. The private as a whole is there, again OPC comes under that, small company comes under that, other private company will also comes under that. So small company is other than private company which satisfies both the conditions. First one is where PUC, paid up capital, is less than or equal to 4 CR, or we even call it as not exceeding 4 crores, and it is and condition turnover does not exceed 40 crore rupees, and it is not applicable to holding or subsidiary company, section 8 company, or special act company. Like LIC is a special act company because that is under IRDA. Bank is a special act company, Banking Regulation Act. Those companies can never become the small company. It is asked in a question being asked in the Malleshwaram students, but they did not answer in the class. So a holding company can't be a subsidiary company, sorry, small company. A subsidiary company can't be a small company. Section 8 company also can't be a small company, and special act company also can't be a small company. That either has to be a private company or has to be a public company, not as a small company. Understood? Small company is a company in which satisfies both the condition: paid up capital does not exceed 4 CR and turnover does not exceed 40 CR. Now there is an amendment here. If somebody is writing in the September 26 or Jan 27, then you should go through this amendment, because they changed the 4 and 40 crores to 10 and 100 crores. So you consider it as amendment is there here. Check the amendment. For May examination, 4 and 40 is the right answer. If somebody is writing for then September and Jan next year, then you can go through that. What is OPC? One person company which has only one person as a member is called as a one person company. For the purpose of backup, they have given a concept called as nominee, which we will discuss later. They will appoint a nominee, must be appointed by the sole member. Then comes holding company and subsidiary company. So what is holding company? A company which has one or more subsidiaries is called as holding company. When you will be called as a father and mother, when you have one or more child is called as a parents. The same way holding company is a company when you have one or more subsidiaries. So company which has one or more other companies are subsidiary companies, then you are called as holding company. So then what is subsidiary company? This is an important definition again. Holding is not important, subsidiary is important. So subsidiary company is a company which satisfies one of the two conditions, then it is called as a subsidiary company. For example, you are a company in which the holding company, that means I'm not talking about you, I'm talking about other companies doing something else in your company. So in which holding company controls the composition of its board of directors. Sir, what do you mean by control? We generally call it as more than 50%. Sir, what do you mean by composition? I call it as mix. Any company which has a control of mix of your board of directors. Control. Sir, what do you mean by that? For example, if subsidiary company, I'm taking directly a subsidiary company, has five directors, what is more than 50%? 3 directors. I know it is 2.5 something, but you can't cut the body into half and make it as 2.51. So that is a 3 directors. If consider this is B limited, there is A limited. If A limited can appoint 3 directors, or if A limited can remove 3 directors from your company, that means majority of the composition, that means out of total 5, 3 are being appointed or removed by the other company, then that company is called as holding company and you are called as a subsidiary company. Controls the composition. Mix yav ತರ ಇರಬೇಕಂತ decide ಮಾಡೋದು A limited. That is first part. Second part is exercises are controls. Again, control means more than 50% only. More than half of the total voting power. Either it is by itself or by with its subsidiaries. So what is it? As we know that in government company example I gave that. So there is A limited which has 60% in B limited. Then A limited is called as holding and you are called as subsidiary company. Now B limited is also having 70% in C Limited. 70% in C Limited. First you check. Is A and B holding on subsidiary? Because more than 50% is there. B and C is a holding on subsidiary. Is A holding anything in C? Directly not. But when you check here, A is holding 60% in B Limited. That means B Limited is accustomed to act as per the instructions of A Limited. B is holding 70% in C Limited. That means C is required to act as per the B Limited. That means A is directly controlling B Limited and B is directly controlling C Limited. A is indirectly controlling C Limited via B Limited. Either you are holding anything in C Limited directly or you are holding by one or more subsidiaries. A Limited as B Limited, again D Limited is also there, again in which 70% is held and D Limited is holding 30%. Yes, out of 100%, B is holding 70 and D is holding 30, still 100. Either you control by one subsidiary or more than one subsidiary, but it has to be via subsidiary only. A Limited has 30% in B Limited and B Limited has 80% in C Limited. Now B and C are called a subsidiary and holding, but A and C does not have any relationship because it is not controlling directly or indirectly also, because B Limited is also not a subsidiary first of all. So anything which is controlled either one subsidiary or multiple subsidiary, first of all it has to be subsidiary. Then only it is called as subsidiary company, holding and subsidiary. Understood what is subsidiary company? A company in which the holding company is holding more than one half of the total voting power or controls the composition of board of directors. It is called as a subsidiary company. The company which is holding those things are called as holding company. Then comes associate company. Sir, I agree. See, it is 287 subsidiary company, 206 is associate company. Sir, if I am not holding more than 50%, then I am not called as subsidiary or holding company. But if I am holding, for example, 30%, then don't I have any relationship? Yes, definitely have a relationship, but not by way of subsidiary and holding, but way of a associate, because they tell that associate company is a company in which a company exercises significant influence on the other company. Then other company is called as associate company. The company which influences the other company is called as investor company. For example, A Limited and B Limited, still two companies are there, in which A Limited is holding 40% in B Limited. Now this 40% is called as significant influence. That means you can't control the other company, but you can influence any decisions of other company, because you are a major part in that, major junk in that. That is why we call it as A Limited is a investor company, B Limited is a associate company. This is how it is there. A company where another company has significant influence but not a subsidiary. If it is more than 50%, directly goes into the category of subsidiary. It is not a subsidiary, but it has a significant influence. So what is significant influence? It is more than or equal to 20% of total voting power or participation in the decisions under an agreement. That means you still can participate. That's it. You can't take the decision. You can tell this can be done, this can't be done, but you alone cannot take a decision. Again, this associate company includes joint ventures. Associate company is a company in which other company is having significant influence in your company, as well as it includes joint ventures. What is significant influence? You take a column arrow mark down that, or take write on more like significant influence means having more than or equal to 20% of the voting power in the other company. Then KMP. This is not important here. This is important from in other chapter. That is why I just gave it under the definition part. What is KMP? Key managerial personnel, who are the top people who can run the company, or according to whose instructions or guidance the company is being run, is called as a KMP. Generally, there is a definition for KMP. So KMP includes, it is an inclusive definition. You remember that inclusive and exhaustive definition which we discussed. So CEO or MD or manager, I am not talking about purchase manager, sales manager. Manager is one position which is having at the top position. There is a position. And whole time director is also there. CFO is also there. That means CEO or MD or manager or whole time director or CFO, or it is CS also, company secretary. Last one is, this is not notified anything else. Last one is, whatever I told, MD, CEO, all those people, just one level below those people are also called as KMP. Look at the language. Officers not more than one level below the directors. That means directors are there. ಇದಕ್ಕಿಂತ ಒಂದು ಲೆವೆಲ್ ಅಷ್ಟು ಹೋಗಿ ಅದಕ್ಕಿಂತ ಕೆಳಗಡೆ ಹೋಗ್ಬೇಡಿ ನೀವು. ನಾಟ್ ಮೋರ್ ದೆನ್ ಒನ್ ಲೆವೆಲ್ ಬಿಲೋ ದ ಡೈರೆಕ್ಟರ್ಸ್ ಆರ್ ಕಾಲ್ಡ್ as KMP only. So CEO, CFO, whole time director, manager or company secretary are one level below all these directors related parties also called as KMP. Then officer, not important, they just gave it because in many places officer will be liable to penalty, all those things. Officer includes any director, manager, KMP or any person in accordance with whose direction the board or any director is accustomed to act. It is like a KMP part only. Officer in default, any of the following person liable for penalty or punishment. That means whatever the persons I told, if they did not comply with any provisions of the act, they are liable to pay the penalty, or they might even required to go to the imprisonment also. So officer in default means not doing something which is required to be done. So if any officer does not do anything or liable for any penalty or punishment, then that party is called as officer in default. It can be WTD, KMP, or any persons who is having in charge of any things. You can go through that. Then comes promoter, 269, again important part. Who is promoter? In a general language, I'll tell that any person who has the idea of starting a company or whose name is entered in the prospectus of the company or in the annual return of the company is called as a promoter. So a person is named in as such as in the prospectus. As such means as a promoter in a prospectus are identified in the annual return that he is a promoter, or he has a control over the affairs, not yours, of the company, but the company as a shareholder or director or otherwise, or the board of directors is accustomed to act on the advisor directions. That means the moment I tell something, you do this, if the other party is doing it, then I am a promoter. I have that right to tell the people or company to what to do and what not to do. But it will not include any person who is acting in a professional capacity. Because when I told in the earlier, promoter is a person who is starting a company, but promoter is taking the help of chartered accountant or company secretary, any person to file the forms in the ROC, all those things. Even though just because we are participating in the formation of a company, we are not participating via business angle, we are participating via professional angle. That's it. That is why these professional people are not promoters. Any person who is identified as promoter in annual return or what is this, named in the prospectus or has a control over the affairs of the company or board of directors, or board of directors are accustomed to act as per the directions of some person. But it will not include any person who is starting a company in a professional capacity, maybe CA, CS, CMA or advocate who are in practice helping the company in this thing. Then other definitions are, one is financial statements definition. What is financial statements? Anything. These are the important statements of a company which consisting of mainly 5 elements. So what are those 5 elements? One is balance sheet, P&L, CFS, not consolidated, cash flow statement, notes to accounts, and SOCI. What is SOCI? SOCI, statement of changes in equity. So financial statements include balance sheet, P&L account if it is a profit making company. If it is a NPO, then it is IND expenditure statement, that is income and expenditure, cash flow statement, SOCI, and explanatory notes to accounts which are there. Here for few companies cash flow statements are not required. OPC, small company, dormant company. Just because they are not preparing CA cash flow statement, it does not mean that they are not preparing financial statements. The law only exempted those companies from preparing the cash flow statement, not required. So this 5 elements is included in that. This can be asked as an MCQ, maybe. OPC is has prepared financial statements, but that does not include cash flow statement. Is it in compliance with the act or not? That something can be asked. OPC, small company, and dormant company. Dormant company means anything which is formed for the future purpose or holding any asset of the company for future purpose. I think I have given an example of Ola in the class. Bhavesh Agarwal was in college. He wanted to do the business. By looking into the Uber, he wanted to start the Ola, but he was in the college. What if that idea does not work? Sir, I'll complete the college and I'll start the company. By that time, if somebody steals that idea, name, logo, everything, to have the safer side, they'll register the company. Dormant means inactive type of thing. They don't do any activity, purchase, sales, nothing is there. It is just a company. which is held or incorporated for the purpose of future business purpose or holding any intellectual property or assets in the name of company. Once they completed the college and they'll come out and they start the business. Then financial year. Any period which is ending on 31st March of every year is called as financial year. A 12 months period ending on 31st March. But if the company is incorporated on or after January 1st, then the financial year will not end on this 31st March, but end on next 31st March. That means around 15 months is the financial year. That means a financial year can be either minimum to minimum, how many months? No, not 12 to 15. Think at least 3 plus months, not 3. If it is exactly 3, that comes under the next financial year. 3, if it is considered December 10th, it has started. That means December 20 days, again Jan, Feb, March. That means 3 months, 20 days is there. That can be a financial year. Either it can be more than 3 months, up to 15 months. That's it, as a financial year. If it is incorporated after on or after 1st January, financial year ends on 31st March of the following year. That is next year. Then comes books of accounts. Sir, just now we told financial statements, P&L, balance sheet, all those things. But all those things are a summarized statement. If I go to the P&L, profit and loss account, they tell that sales 25 lakh rupees. That 25 lakh rupees sales might not happen on a single day at single point of time. That might have happened on a period of 12 months. All those details which are consisting in a detailed manner, those things are called as books of accounts. So books of accounts are those things which includes records in respect of. That means any records you prepare with respect to all sums of money received and expended. That means can I call it as P&L related? Because money received, income part that comes, expenditure means sales, rent, everything. All the sales and purchase of goods and services, can I call it as trading related? All the assets and liability, can I call it as balance sheet related? And items of cost, that means cost records. If you prepare any records to support these main financial statements, which are there in a detailed format, are called as books of accounts. It includes, so you don't write as P&L related, balance sheet related. You have to write the exact things which is given, but it will not be asked in the examination. All sums of money received and expended, all sales and purchases of goods and services, assets and liabilities of the company, and items of cost are called as books of accounts. Then body corporate. Here there is something missing. I'll make you write. You can write it there. Body corporate, as per 2 bracket 11. Body corporate means it includes 4 things. It excludes 2 things. It includes 4 things. It excludes 4 things. So what does it include? It include, I'll write it as simply Indian company, that is 2 bracket 20, anything which we discuss. Then it includes foreign company. What is the section you remember? 240 or 242? 42 is financial statements. FO, yes, it is 242 only. Then Indian LLP, that is as per LLP Act 2008, and foreign LLP. So the definition goes like, body corporate includes a company which is incorporated under this act or any other previous companies act, and it also includes company incorporated under foreign and having a place of business in India, Indian LLP as well as foreign LLP. But it will not include cooperative societies, and there is not given, we call it as corporation sole. Corporation sole. Then comes foreign company, 242. It is a body corporate. That means incorporated entity outside India, incorporated outside India, which has a place of business in India. That means Apple company, which is incorporated in US, but it is doing business in Bangalore. So it is a foreign company. Whether the business is done by itself, that means they only can come and do the business, or they can appoint somebody as an agent to do the business on their behalf. It is also foreign company. Or they can do business in physical, that means establishing a physical place of business, or they can do even electronic mode also. For example, Amazon, for example, Netflix, all those things are doing electronically also. And it conducts in any other manner. There was one more point earlier, that point is removed now. Whether that business is, main servers of the business is installed in India or not. Earlier, it used to tell that main servers has to be installed in India only. Now it is not there. A body corporate which is incorporated outside India and having a place of business in India by itself or by any agent, either physically or electronically. And the last statement is definition is prospectus. Any document described or issued as a prospectus, and it includes a red herring prospectus, shelf prospectus, or any notice, circular, advertisement inviting offer from the public for subscription or purchase of securities of body corporate. Anyway, we will discuss in chapter number 3, prospectus and allotment of securities. So these are the definitions, and I gave it for quick comparisons. So what is private company, public company, small company, government company, OPC. So number of members, capital or turnover, and key restrictions what is there. And one important thing which we have in this every chapter at the end is exam tips. These tips are based on this chapter only, but highly probable questions which are being asked in the recent examinations. See, whenever you uh, I used to tell in the main class also, before you read the main content, read the summary notes and come back to the content. Before you read the summary notes, you read the summary to this orange color and come back to this. So, company which is incorporated under this act, Companies Act 2013 or previous company law, this definition is inclusive definition. Then you can go and read the definition. What is private company? Three restrictions are there mainly. Transfer restrictions, maximum 200 members and no public invitation. That three statement is too much lengthier is there, but that compiled version. Employees and ex-employees are not counted in 200 and limit of private limited company. That exceptions. Small company, both conditions has to be satisfied. Capital as well as turnover must be satisfied simultaneously. I did not give the number. If I give the number, that becomes a full definition. KMP, it is an exhaustive list, 1 to 4 items. Items for 5 and 6 are flexible, and board of directors, that definition you have to go there. Officer in default, 7 categories, the definition part is there. Associate company, significant influence, more than or equal to 20% of voting power or participation in business decision. Cash flow statement not required for OPC, small company and dormant company. Financial year ends on 31st March, but if it is after the 1st Jan and 31st March of next year, then promoters acting merely in a professional capacity is excluded from the definition, because that people tend to ignore it. They might ask in an MCQ part. So whatever we discussed till now, that was summary. This is summary to the summary. But this helps at the time of examination. When you are going examination, quick 30 seconds, then again 30 seconds, then 30 seconds done. This is what I felt very important from first chapter. Now, see, we took almost 30 minutes, completed one chapter. Because first chapter there is no question, I don't want to go into the question bank. Even I have the updated question bank which I prepared recently, which consisting of chapter 2 to 15, which is having 283 questions. So we have questions also, and I have even source also. See, this consider 2.1, that is asked in the previous year paper Jan 26 examination recently. And then comes September 25 previous year paper, after which RTP September 24 is also there. Then we gone for MTP. That 8 papers is released by ICI. Remember that 8 papers is also included here. Till May 26 RTP is also included. I think May 26 RTP, they don't have the question on this chapter. Yes, May 26 RTP is also there here. All the questions which are updated as per the these things is entirely there in this chapter. You follow the marathon correctly, do the questions which are being discussed here. I'll not discuss all the questions. I'll discuss few questions, and presentation part I'm not going to discuss because this is summary. Then we are beginning with chapter 2, that is incorporation of company. I'll give a minute break. You just have a look into the first chapter. If you feel anything to be asked, you mark it. We can discuss that at the end of the class. Whenever I give a time, don't waste, just have a look into it, because when you listen to it and when you read it, it becomes twice the revision. It becomes easily or this imprint in the mind. Generally, what is the break time generally? At what time we take? 10. Okay. And one more suggestion is don't skip any class. Anyway, it is 3 days. Even if you like not feeling like coming, if you don't feel like attending the class, sorry, it is raining. Don't do any nonsense. Just come and sleep in the class. I don't care because something is going in your head. Have, have people revised at home and came here or what? You are testing on me only. You are ಸರ್ ಎಲ್ಲ ನಿಮ್ಮ ಭರೋಸೆ ಮೇಲೆ ಬಿಟ್ಟಿದೆ ಸರ್. ವಾಟ್ ಎಮ್ ಜೆ ಹಾಂ ಅವನ ಎಕ್ಸಾಮ್ ಬರ್ದಾನಂದ್ರೆ ಓದ್ಲಾರ್ದಂಗೆ ಬಂದಿರ್ತಾನೆ ಹೆಂಗೆ? See, in that 1 minute, focus is not on remembering, focus on just going through everything. Yesterday, which team won the match? Mumbai, huh? Done. We'll continue. Chapter 2, Incorporation of company and procedures related to thereto. We're discussing. Again, same definition. I'm not discussing the promoter definition. You go through that later. Breach of minimum members. Sir, what is this breach of minimum members? In the first chapter at the end, the comparison table I gave, minimum number of members for public companies 7 and private companies 2. Consider in a public company, out of 7 members, 2 members resigned, something happened. There are only 5 members in the company now. And can I tell, when I tell that 5 members are there out of, instead of 7, there is a breach of minimum number of members. And if there is a breach of minimum number of members, and they continue to do the business without appointing the remaining 2 members to comply with the statutory law. In that case, consider on 1/1/26, the minimum number of members has come down to 7 or has come down to 2 compared to private or public company. After which they continue to do the business till 30th June 26. That means 6 months is completed. They did not make it as 7 or 2, which is required. And whatever the liability which is coming after 6 months, for those liabilities, those people who are personally present in the company are having unlimited liability, personally present. Generally, company is having a what is this? Feature of a limited liability. What is my limited liability? To the extent of unpaid up share capital in case of share capital company, or to the extent of amount guaranteed in case of a guaranteed company. But that limited liability will be converted into unlimited liability if there are less number of members required other than the statutory limit. So, if the numbers fall below 7 or 2 in case of public and private company, and business is continuous for more than 6 months, Up to 6 months, sir, any business which is done between this period are they liable? No, not liable. Because that is a transition period or buffering time they given so that they can appoint the people. Because appointing the member is not easy task. I can't bring some beggar and make the member. I should find a suitable person. But members who are aware of the situation becomes personally liable, that there are less than 7 or 2, still we are doing the business. If I know it, I am personally liable. And such members are severally liable for all the debts incurred during that period. During that period means after 6 months. 6 months, they are personally liable. Now, procedures are there with respect to incorporation. I'll just discuss in a flow manner. Whenever a company wants to incorporate, they have to file first a form called as a run form, reserve unit name, or the form can be filed along with the incorporation document only. So when you file the run application, whenever you are filing the run application, you should specify a name stating that, sir, I want to incorporate my company on this name. Is this name available or not? If the name is available, they intimate you within 20 days. You go file other documents, MOA, AOA, and get it incorporate. If the name is not available, file one more application continuously until the name is available. Once it happens, you have to give second option and third option also. If first name is not available, give me second. If not, then give me third. If not, reject the application. I will make the new application. That is how it is there. 3 names are there. And the same, whatever I am discussing with respect to incorporation, similar thing is there for LLP. Just the document name changes. Here MOA, AOA is there, that LLP agreement is there, subscriber sheet is there, consent letter is there. We will just remember this because anyway we are not, when we discuss the main class, it used to spread around maybe 1 month. So 100 hours used to go for one month or maybe 40 days. That is why it feel like left out somewhere and again we are connecting. Because it is 3 days, you'll get it connected easily. So first you should file that run once the name is available. Then you should file something called a Spice Plus form. Spice Plus is, that can be asked as an MCQ point, simplified proforma, not perform, proforma, PROFARMA, proforma, for incorporating the company electronically. Plus is the second version. Earlier it was only Spice, now it is Spice Plus. That form is called as INC 32. You have to file that, and that form should include MOA, AOA, Memorandum of Association and Articles of Association. MOA consisting of 6 clauses, AOA consisting of all the other clauses which is required to run the company. And that should be signed by all the subscribers of MOA and AOA, generally the promoters and first directors of the company. And you should even give 2 declarations, not 2, actually 3 declarations. Sir, who should give? When I say you, there are 2 parties who should give the declaration. One is the promoters related category, they should give 2 declarations, and the professional related category people, they should give 1 declaration. Sir, who are the professional? The people who are acting in a professional capacity. That in promoter definition we excluded CA, CS, CMA or advocate who are in practice. They should give a declaration that stating that whatever the procedures which are required as per the Companies Act 2013 has been entirely complied with. So declaration by a professional, advocate, CA, CMA, CS in practice, and a person named in AOA confirming the compliance. Every compliance which is required as per Companies Act 2013 has been complied. Then again one more declaration has to be given by subscriber. So stating what? Whatever the CS will file with the ROC and they'll complete the procedure. But what the promoters give to the CA, CMA or advocate is it right document or wrong document? How the CS will come to know? That is why the liability is on the promoters only. They should give a declaration that whatever the details given for these people is perfect. It is not misstated or it is not fake document or it is entirely genuine part. This is first declaration that has to be given by subscribers and first directors. Second declaration they have to give it as that we are not convicted. We are not convicted during the last 5 years for the promotion, incorporation or management of any company. ನಾವು ಯಾವ ಕಂಪನಿಯನ್ನು ಸ್ಟಾರ್ಟ್ ಮಾಡಿಲ್ಲ, ಅದನ್ನು ಪ್ರಮೋಟ್ ಮಾಡಿಲ್ಲ, ಅದನ್ನು ಮ್ಯಾನೇಜ್ ಮಾಡಿಲ್ಲ. ಯಾವ ಥರ ಫ್ರಾಡುಲೆಂಟ್ ಮ್ಯಾನರ್ ಒಳಗಡೆ ಮಾಡಿ ನಂಗೆ ಯಾವುದೋ ಶಿಕ್ಷೆನೂ ಆಗಿಲ್ಲ, ಜೈಲಿಗೂ ಕಳಿಸಿಲ್ಲ. ಫಸ್ಟ್ ಆಫ್ ಆಲ್ ವಿ ಶುಡ್ ಅಂಡರ್ಸ್ಟ್ಯಾಂಡ್ ವಾಟ್ ಇಸ್ ಕನ್ವಿಕ್ಷನ್. ವಿ ನೋ ಇಟ್ ಆಲ್ರೆಡಿ ಇನ್ ರೆಗ್ಯುಲರ್ ಕ್ಲಾಸ್. Conviction is something where you are made guilty under by court. If police arrest you, it is not convicted. If the court treats you as a guilty of mind, then you are a convicted party when you are sent to the jail. And after that, there should be verification of registered office, because every company should have a registered physical office that has to be done. and address for correspondence till the registered office is established. When you are starting the company, if you don't have the registered office, give some correspondence address, communication address to the ROC. Then you have to give the details of subscribers also. Subscribers means who are becoming the members of the company, subscribers, promoters, all those things. What you have to give: name of the parties, photograph, parents' name, nationality, date of birth, educational qualification, and occupation, what you are doing. And you should give the PAN, email ID, phone number, and proof of identity and residential proof. You know what is generally proof of identity? It is Aadhaar or driving license or passport they can give. The residential proof, generally they take bank statement. Generally bank statement they'll ask. And if he is already a director or promoter in other companies, because as per the section 140, chapter 11 of board of directors, a person can be a director in how many companies? Are not there for us. It is 20 companies, including 10 public companies. Provide that company name, that company's SIN, corporate identity number, and role. What role? You are in a director, whole-time director, managing director, manager. What role you are in? Again, if one company is becoming a member of other company, if the body corporate is a subscriber, then give the name of that company, SIN number, GLN. GLN is like a SIN number only, global location number. SIN is for India, GLN is for global, if you are MNC. And registered office address and certified board resolution. These are the details has to be given. And if it is LLP or partnership is becoming a subscriber, then resolution of all the partners. And foreign entity means certificate of incorporation and registered office address of that thing has to be given. So if these three you can ignore it, but you should write the first 2 points if that is being asked. Then you should give the details of first directors also, name of the director. DIN is what? Direct identification number. As we have PAN number, DIN is also there for directors. Nationality, residential address, proof of identity and interest in other firms. That means if you are already director in some other company, that also has to be given. And consent that you are ready to act as director. I can't directly name Mukesh Ambani as my company's director because I should take the consent first. And every subscriber also has to give a declaration that they are not convicted of any offense related to promotion and management of any company. You can put it on the above point only we discussed. And not found guilty, fraud, mispresence or breach of duty in the last 5 years. And all documents filed with ROC are correct, complete and true or to the best of their knowledge. Whatever the declaration we discussed earlier, that is being given here. You can link that with this part, declaration part. Then what documents which is there? Once the documents are filed with ROC and that is satisfied with all the documents which is filed by you, ROC will register all the documents and issue something called as SIN, corporate identity number or corporation identity number. Along with that, they'll issue certificate of incorporation, COI, certificate of incorporation. And company must maintain and preserve all the documents until its liquidation. I call it as permanently. Permanent thing. This is actually as part of section 88, register of members and all those things we discussed. This can be an MCQ part. The company incorporation documents has to be preserved for what? 8 years, 7 years, lifetime, or all of the above. That is what, right? This is with respect to incorporation. Preserve the name. Once the name is available, file Spice Plus, that is INC 32, along with MOA and AOA, which is signed by the subscriber. Give the declaration by professional people as well as subscribers to the MOA and AOA. Along with that, give the details of all those people, name, address, PAN number, full biodata you give them. And 3 declaration consisting of one is complied with law, not found guilty, and they complied with law is for 2 people, professional as well as members, and declaration of non-conviction is for this party, subscribers or first directors. And they should not found guilty, fraud, anything with respect to last 5 years. Anything has to be given. After that, if everything is perfect, then ROC will register the documents, issue something called as SIN and COI, certificate of incorporation and corporate identity number. And there is one more part with respect to that. Whenever you are incorporating, if you give the false information and get incorporated, that means actually you are in the jail for in the last year only, and you are telling that I was not convicted in the last 5 years. That means you give false information. You told that I was not director in any other company, but you are actually director on other 3 companies. That is also false information. You told you are an Indian, but you are not any information you give it as false. In that case, If any person furnishes false or incorrect information or suppresses material facts. First one is, it is, if you put it in other way, giving something which is not right is first part, what I give the arrow mark. Second one is suppressing material facts, not giving something which is required to be given. Suppressing means hiding. Knowingly during that incorporation, then you are liable for 447. What is 447? Punishment for fraud. And promoters, first directors and other persons making declaration shall be liable for all those things. And if the tribunal feels necessary, it may pass any order with respect to following things. This is separately asked for an MCQ, or not MCQ, 3 marks examination. If any person incorporated by giving the false information, what are the powers of tribunal? Tribunal can modify the MOA and AOA in public or company interest. Declare liability of the members as unlimited. That means the limited liability concept goes away. Remove the company's name from ROC, Register of Companies, or order for winding up of the company, or issue any order such it deems necessary. It felt okay, you go and merge with some other companies, you can order it. You do anything whatever you feel necessary. But before you pass any order, you give something called as ROBH, a reasonable opportunity of being heard. Before you punish him, ask him, why did you do it? If you are convinced that it is not this purposeful fraud, you can give some relaxation also, genuinity or all those things. So this is with respect to the thing. Read with point 2. That is, this is point 4, point 3 something else, and read with point 2. Then signing of MOA and AOA. So all the subscribers shall add the name, address, description, and occupation in presence of at least one witness who attests the signature. That means when you prepare MOA AOA, you add all the clauses, sign it. When you are signing, you add your name, you add your address, and you sign it. And there should be at least one witness who is seeing all the things. It is right. And if you are a subscriber who is illiterate, that means unpad, then you should put your thumb impression or mark, affix means attach, write additional subscribers names, number of shares taken, and authenticate with the own signature. That means consider I am unpad, illiterate, then I will put my signature, and other party who is there here will tell that yes, he has read all the documents, he know what is there, how many shares he has taken, and put his thumb, stating that other party has signed it, everything has complied. And if it is typewritten or printed details, acceptable if the accompanied by signature or thumb impression. If the body corporate is a subscriber, then company cannot come and sign it. If the company has a common seal, they will go for common seal. If the company does not have any common seal, then it should be signed by a director or officer or employee. Director or officer means no need for any resolution. If you appoint any employee to sign that, then you should authorize it by board resolution. Because director is a board, officer is also board part. You don't need any resolution. You can directly do that. But if you are appointing some employee, then you need a resolution. And authorized person cannot simultaneously act as a subscriber also. And if it is LLP as a subscriber, same thing. But you should authorize a partner. Foreign national or NR means same thing. But you have to do state a proof of identity must be notarized by notary public with a official certificate that I am a foreign national. Please allow me to sign that. And foreign national who is resident in India means if he has holding business visa, there are multiple visa, education visa, tourist visa, again business visa. If you have business visa, if he is residing in India with an intent to incorporate a company, then business visa is not acceptable to, that is business is acceptable for those people who want to do the business in India. Those people who are of person of Indian origin, for them business visa is not acceptable, or overseas citizen of India. Sir, then what is acceptable? If you are a person of Indian origin and you are staying in India, then you will might have Aadhaar card or some other address details, then you can use that. Business visa is not acceptable for them. Then one person company has to be discussed. Before discussing one person company, we will discuss MOA and AOA clauses. What is MOA? Memorandum of Association, which every company, it is a primary document or very important document for a company which has to be compulsorily incorporated. Then only we call it as a company. If the documents of MOA and AOA along with other documents which we discussed, they are not incorporated, sorry, not registered with ROC, then it is not, it is company is not going to come into existence only. That is why MOA should consisting of certain details. MOA should consist of 6 clauses, mainly 6 clauses. So what are those 6 clauses? The name clause, situation clause, object clause, liability, capital clause, association clause. These are the only 6 clauses which has to be there. But if you are incorporating one person company along with the 6 clauses, then 7th comes as nomination clause, because company should appoint a nominee. Only generally 6 clauses. What does the name clause consist? It is not the name of the company, it consists the type of the company. Whether you are a public company, whether you are a private company, charitable company, OPC, what type of company you are. That is why name clause tells that whenever you are a type of company, the name of the company should end with something else. That ending part is given under name clause. If you are a public company, then the name of the company should end with limited. If you are a private company, name of the company should end with private limited. Again, one person company, private limited OPC. And if you are doing that with Section 8 company, then no need to use the word limited or private limited. You can use the word charitable or this no, not trust, chamber of commerce or association or club, such kind of words you can use it at the end of the name. LLP is not discussed under Companies Act. LLP is discussed under LLP Act. Here it is only company part. LLP means it is either LLP, only the abbreviations, or limited liability partnership, full name. Then the situation clause. Situation clause means where it is being situated. Then you have to just state the state where the registered office will be located. You may have 1000 branches. I don't care where your registered office is situated. You give the name of the state of that this thing. Then object clause. What is the purpose of the company? Why did you start the company? Sir, we are doing this company for the purpose of giving the education. Then in the object clause you write the what is imparting the coaching for professional courses like CA, CMA, CA, something you write it. But here one catch is there. When you are writing object class, you have to write 2 objects. One is main object, second one is other or ancillary objectives. What is main objective? Main purpose. That is, for example, giving the coaching is the main objective. What is other objectives? We are having the laptop, we are having the camera, we are having the TV, iPad, everything. Buying of all these things are not our objective, but these are required for the purpose of giving a quality education for the people. It is like supporting the main objectives of the company. Main objective as well as ancillary objective has to be there. Then liability class consisting of whether the company is a limited company or unlimited company. Mainly it tells that what is the liability of the members. What is the liability of members? If the company is limited by shares, then the liability of the members are limited to the unpaid up value of the shares, then guarantee company, then everything. Generally, the name liability class consists of the liability of the members of the company are limited to the extent of unpaid up capital. Then capital class, mainly applicable for those companies which has a share capital. If it is a guarantee company without share capital, this clause only will not come, because when there is no share capital, then what is the use of writing that capital? So we have share capital. What does it consisting of? It should consist of mainly 3 things. The authorized share capital should be there. That should be consisting of 3 things. One is number of shares, second one is face value, then share capital total. Number of shares into face value multiplied that, you get the total amount. 1000 shares, 10 rupees, 10,000 is my capital. Share should be separately mentioned, face value should be mentioned, total share capital has to be mentioned. You can even mention issued and subscribed capital also. That is not the mandatory, but authorized share capital is a mandatory part. Then association for OPC specifically drafted. Actually, there is a mistake here. Association means the people who are coming together to form the company. Association of people, that has to be there. All the names, numbers, everything, shares and signed. And nomination is applicable only for OPC. The name of the nominee should be there. What is the purpose of MOA? There is something called as doctrine of constructive notice that we discussed in the foundation part. Whenever some other party is dealing with the company, should know why the company has been incorporated and enter into that contract only for that purpose. If you are into the coaching business, then you should come and enter into a contract with respect to coaching. That means you take admission for CA, CMA, any course. But if you give me the money for the purpose of constructing a house, then you are not protected. Sir, why you are not protected? because I filed the MOA with ROC, that is a public document as per section 399. Whenever you are entering the contract, you can read that MOA and enter the contract. That is the main purpose. Object for operation is it will inform the shareholders, creditors, and other about the company's power. It is a public documents, doctrine of constructive notice applies, and any act which you do beyond the powers of MOA, that act of void, that is ultra virus, because it is like the constitution for a company. You can't do anything which is other than that. Even tell that MOA is a charter of the company. Then I'm not going to discuss again name clause, reservation of name, situation clause, doctrine of ultra virus, liability clause. Some, I think 2-3 clauses are missing here. Name, situation, liability, object is not there. Anyway, we discussed that. You can go through that later. What is doctrine of ultra virus? Doctrine means what? It is a well established principle. Ultra virus means, ultra means ultra large. What? Ultra means beyond. Virus means power. When you are acting beyond the powers of given to you, then we call it as a doctrine of ultra virus. For example, company has given a director to borrow up to 5 crore rupees, but the director went to the bank and borrowed 10 crore rupees. That means he went outside the authority for the remaining 5 crore rupees. First 5 crores company is liable, remaining 5 crores director is personally liable for the bank. That is what we call it as doctrine of ultra virus. Then articles of association. If you remember the clauses which we discussed in MOA, there are only 6 clauses in MOA. But appointment of director is not there, appointment of auditor is not there, conducting of AGM is not there, EGM is not there, sending a notice is not there. Nothing is there in those things. But they are required for the purpose of running the company. Anything which is required to run the company, but that is not present in a MOA, can be present in AOA. It is like a balancing figure document or residuary document. It is called as articles of association. There are 90 plus model articles clauses has been given by MCA, that is ROC. They can use those things. They can increase that to 200,000 up to them. Any number of clauses that can be added. You can have only 5 clauses also. There is no mandatory. But MOA 6 clauses are mandatory. Now here it is an MCQ points might be there. These two things. Sir, I am a company. How many types of company are there? Company limited by shares, company limited by guarantee, or unlimited company. Guarantee and unlimited company also can be divided into two. Limited by guarantee with share capital, without share capital. Unlimited also with share capital, without share capital. There are 5 types of company. Limited by share, guarantee without share capital, guarantee with share capital, unlimited without share capital, unlimited with share capital. 5 clauses. Whenever you are any type of company and want to write an MOA, form an MOA, don't take A4 sheet and do it. There are some prescribed formats given by MCA, Ministry of Corporate Affairs. Just you have to follow that. If you are a company limited by shares, follow for MOA table A. Guarantee no share capital, table B. Guarantee share capital, table C. Unlimited no share capital, D, and unlimited share capital, that is E. General share capital company, guarantee without share capital, guarantee with share capital. Unlimited without share capital, unlimited with share capital. A, B, C, D, E tables. They may ask an MCQ out of which. If you are a company having unlimited liability with share capital, what is the form which is used for forming AOA? If they ask, don't write E. AOA forms are different. MOA, ABCD, E, AOA are another 5. F, G, H, I, J. But here just a small correction. So what is that correction? First one, there is no correction, limited by shares. But if you look at the other G, H and I, J, B, C, D, E. What is B, C and D, E? We told without share capital first and with share capital later in case of MOA. Here just exactly opposite in case of AOA. Same, guarantee with share capital comes first for AOA. Here guarantee without share capital comes later. Here also unlimited with share capital, unlimited without share capital. See, I could have directly given us, see, one thing I have to keep it constant. I kept everything this table ABCD constant because A to Z, that will be in sequential format. If I give without share capital, with share capital, I should take this here and I should bring here. You will get confused with respect to alphabets A to Z. You have to remember as ABCD, no problem. F, H, G, J, I. That becomes a bit complex. That is why I kept it the same way. I just changed this part. with share capital, without share capital, with share capital, without share capital for AOA, without share capital, with share capital, without share capital, with share capital for MOA. That is the only difference. You should remember. Understood? Can you alter the AOA? Yes, at any time you can alter the AOA. For example, by doing passing a special resolution subjected to Companies Act and MOA. That means Companies Act is ultimate. Below that comes MOA. Below that comes AOA. You can do anything without going beyond the powers of MOA and Companies Act. See, MOA can override AOA. That is possible because MOA is more powerful than AOA. Companies Act can override MOA and AOA because Companies Act is more powerful, but you can't go on the other way. So you can convert public company to private company. Then central government is required, approval is required. You have to apply within 60 days of passing a special resolution in form number called as RD1. When I say central government approval, central government you don't need to apply. They delegated the power to regional directorate. No need to remember this. Just I am discussing. But for private company to public company, is it given anywhere? Then ROC filing has to be then consider you converted from public to private. Central government you conducted EGM, passed a special resolution. The moment you passed a special resolution, tell to the central government, take the approval of central government within 60 days of passing that resolution. Once you get the approval for conversion of company from public to private, then tell to ROC, because ROC in MOA they written it as ABC Limited. You want to change it as private limited. Number of members has to be limited to 200. Everything has to be intimated to ROC later. ROC filing, altered AOA and central government approval within 15 days of what? Getting the approval from the central government. Either end of 60 days or with from the date of getting approval. Then every copy of AOA and MOA, AOA because alteration of AOA shall reflect the alteration. If there is any default with respect to alteration, then there is a penalty of 1000 per copy issued. Without alteration, you altered all those things done, but you did not change in your document, directly issued to some party. There's 1000 rupees penalty immediately. There is one more point. When you alter this MOA and AOA, you should keep all those things in the website of the company also. It has to be anyway there. What is the effect of MOA AOA? That means I started a company, formed MOA, formed AOA, filed with ROC, I came into existence as a company. What is the effect? It is like the legal documents of the company. Everybody can, it will tell the rights and liabilities of the company, members, powers, everything. Once registered, MOA AOA will bind. Bind means make responsible or liable. Company liable to members and members are liable to company. Members are not liable to each other because of separate legal entity concept. It is exactly opposite as partnership. Money payable by the member under MOA AOA is a debt owed to the company. That means I take 100 shares of 10 each, but I paid only 5 rupees. That means I paid 500. I should pay another 500. This remaining 500 I call it as debt I am supposed to give it to the company, debt owed to the company. What is the overriding effect? Companies Act overrides MOA and AOA, and any agreement it is there, and any resolution that is passed by the company. And if there is any provisions which is conflicting with the Act shall be void, because that is ultimate. Act to override MOA and AOA, MOA to override AOA. AOA can do nothing. That's it. Then coming back, Section 8 company, OPC company. Shall we take a break and discuss after the break? Almost some 3-4 concepts left, then we are done with this chapter also. So we'll continue. So we left with the two types of company which can be important from examination angle, which may be asked for examination. The first one is OPC, one person company. As the name only says that one person company is a company in which there is only one person, and actually this type of company, one OPC, has come into existence to support sole traders, sole proprietors who want to have the limited liability, who does not want to take the unlimited liability for all those things. They just give this. So this can be an examination question, this eligibility alone. They can ask a body corporate wanted to form an OPC, is it possible to form, or what is the eligibility of forming an one person company? There are three conditions to be an one person company. First one is only a natural person can form, like you and me. Artificial person like body corporate company LLP cannot form it. And that natural person has to be an Indian citizen. Indian citizen. Earlier the third condition was he should be resident. Now the resident or non-resident doesn't matter. Only a natural person who is an Indian citizen, whether resident or not, can form an OPC. Incorporate an OPC, and along with that, if you want to be a nominee also, then also this condition is applicable. This condition is for member also, for nominee also. Who is resident? They tell that it is anyway not important now because the condition only removed. Who stays in India for at least 120 days in the previous year. Now there are some restrictions. A natural person cannot be member of more than one OPC at any time. That means I can form only one OPC as a member, and okay, I can be a nominee for only one more OPC. I can't be a member in both the OPCs, A and B. I can't be nominee in both the OPCs. But there is a possibility that I can be a member in one OPC and nominee in one OPC. But the moment I am a nominee in one OPC, I am a member in another OPC, the nominee company which is there, if the member dies, I will become immediately the member. Once I become the member, here also I am a member. Then I should choose which company I should come out, and I have to appoint somebody else in that place. If a person becomes member of another OPC, then must resolve within 180 days. That means the moment the member dies, nominee becomes member, within 180 days you appoint somebody else as a member within 180 days. That condition is there here. And minors cannot become the members, nominees, or hold any shares with beneficial interest. And this can be an MCQ point. OPC conversion. OPC cannot be converted into Section 8 company, or OPC cannot do any NBFC activities, NBFI activities. Non-banking financial investment. So can't be converted into Section 8 and can't be an NBFI. To become a nominee again, nominee name must be there in the MOA. That 7th class you remember in MOA there. Replaces the member in case of the death or incapacity. Incapacity may be because of unsoundness or insolvency, anything can happen, or died. And if the nominee withdraws the consent, then notify the sole member and OPC in writing. If as a nominee, I am the nominee and I want to come out, I tell to the member, I tell to the OPC also that I want to resign as nominee. Yes, you intimate them. If sole member shall nominate a new nominee within 15 days, consider when I go out, the member has to appoint with next nominee in 15 days. And first part what I discussed now is me resigning as a nominee. Second part is member does not want me to continue as a nominee. Member want to replace me as a nominee. That means remove me as a nominee. In that case, he can give a notice to the company and he can remove. Again, company shall notify ROC within 30 days if there is any change in the nominee. Sir, earlier ABC, A was a nominee, now B was a nominee. You please change it in MOA. What is the benefit of OPC? Again, no cash flow is required. The annual returns can be signed by only a single director, but in case of other companies, it has to be signed by 2 directors. Only one board meeting is required for half year. In normal company, it is anyway not there for your syllabus. 4 board meetings are required in 1 year. Here, 1/2 year, 1 meeting is sufficient. And OPC can file statements within 180 days from the end of financial year to the ROC. For normal company, within 60 days from the date of AGM. For date of AGM only 6 months time is given. Here it is 180 days directly. And you can change the nominee. Change in nominee is not deemed to be alteration of MOA. Because anyway people come and go, they become incapacity or they die. That is why it is there. Then Section 8 company. What is the objective of Section 8 company? The main purpose of the Section 8 company is to promote the charitable objectives such as commerce, art, science, sports, education, research, sports welfare, religion, charity, environment protection, etc. Mainly, whatever the profits they have, whatever the income they have, they mainly intends to apply for the promoting its objectives. See, I am not telling a single charitable entity has all the objectives. Any objective, if you take in a single objective, 2 objectives, that is also called as charitable objectives. Then whenever you have some profits, you are prohibited to give the dividend to the member. 3 conditions: charitable purpose activities, and you can't give the dividend, and whatever the profits or income you have to apply it to the same purpose for which it has been incorporated. Sir, how do I incorporate? How do I register that Section 8 company? Mainly, the registration process is same. Spice plus INC 32, similar thing is there. But before going to the ROC, first you go to the central government. You get a special license from the central government that I want to do something for the society. Please give me a Section 8 license. Once you give me a Section 8 license, then I'll get the license. I'll go to the ROC, tell that, see, I have a license. Please register me a Section 8 company. So, apply in Spice Plus form INC 32 with the required fees. File MOA and AOA and 3 years financial estimates. Estimate means future, not past. It is for the future. Then declaration by professional, same, similar thing. Everything is complied. All the legal requirements are met. But before that, you can write one more point here. Obtain a special license from central government. Then advantages are same as limited liability company because it is a company. But in normal company, they have to give what 21 days clear notice. But here 14 days there. That can be asked as an MCQ point here. And it is exempted from minimum number of directors and independent director requirements. In normal company, if you are a public company, you have to compulsorily have 3 directors. Here that minimum number of directors is not required. And minimum number of independent director also 2. In case of normal public company, here it also not there. No nomination remuneration committee required. That means how much salary to be paid for which party. To decide that there should be a committee called as NRC committee, nomination remuneration committee. That committee is not required because it is a charitable company. Partnership firm can also become the member of Section 8 company. And words limited and private limited are not required to be in the name. They'll use what? They'll use you can write there. Use chamber, commerce club, association, etc. Then alteration of MOA AOA, whenever you want to do that. Sir, what is alteration of MOA? That means mainly you're trying to change the objective. For that objective, first you got the license from central government to act as Section 8 company. You got some tax benefits also. First you take a prior permission of central government for alteration of MOA and you intimate ROC for alteration of AOA and MOA. Then revocation of license. What is revocation of license? Consider you told that you want to give free education, but you started charging the fees at a later point of time. That means you change the objective or violated the this thing. Then central government or RD on behalf of that can revoke the license if company violates conditions of the license, affairs of the company conducted fraudulently. Because it is Section 8 company, you started doing some money laundering activities. Many times it happens. Or objects are violated or prejudicial to the public interest. You told free, but you started charging the fees. If you do anything, there is a penalty. License is revoked. Once the license is revoked, you are a normal company now. You are not a Section 8 company, private or public or anything. Fine between 10 lakh to 1 crore rupees. For directors and officers, it is 25,000 to 25 lakh rupees. You write one more thing here. Power of tribunal. You write it. It is an homework. That is an important question for examination. Then comes next concept, alteration of MOA. You can change when I say MOA name clause also, object clause also, registered office clause also. Whenever you want to change the name, you should pass a special resolution. You should get approval from ROC. That's actually central government, but they gave the power to ROC. If there is any defaulters means what? You can't change the name where you did not file returns or financial statements, or if you made any defaults in repayment of dues, then cannot change the name. What is this? Sir, I did not file annual returns, that is section 92 and section 134 financial statements. Then you can't change the name. First category. Second category is you did default in repayment of interest, repayment of dividend, repayment of principal, repayment of deposits, repayment of dividend, everything you are supposed to pay in a due date, but you defaulted it. Then also you can't change the name. ROC updates, register and issue the fresh certificate of incorporation. If everything is right, you change the name, tell the ROC will issue it. Then change is complete only after receiving a fresh certificate. Unless until you don't get a certificate, then your name is not registered, changed. This is the procedure. They may ask this also as an important question. Possibility is there. Rectification of name by central government. Why? Why central government will change? Because whenever we are required to register the name, register the company, then we should first of all register the name or run form. But in that there was one more condition also. You can't use the name which is what is that actual word is? In the opinion of the central government is the actual word is what? There are two things. One is you copied somebody. That means the name which is already existing resembles to the existing trademark or name of the company, or it is unreasonable, unfavorable word. Some word is there for central government. Huh? That resembles near to that name is say okay. In the opinion of the central government, I think it is there somewhere. Register office, alteration of object class, no, not there. ಇನ್ನೊಂದು ಪಾಯಿಂಟ್ ಇದೆ. ಒಂದಷ್ಟು ನೇಮ್ಸ್ ಇದಿದೆ. ವಾಟ್ ಇಸ್ ಇಟ್? ಯು ಕಾಂಟ್ ಯೂಸ್ ದೋಸ್ ನೇಮ್ಸ್. ಅದಕ್ಕೇನೋ ಒಂದು ಪಾಯಿಂಟ್ ಇದೆ ಎಕ್ಸಾಕ್ಟ್ಲಿ. It's okay if it is nearly resembling to the similar name, then you can change the name. One is voluntary change, second one is rectification by central government. When somebody makes a complaint to the government, central government, sir, my company is already there, somebody copied my company name or somebody copied my trademark, you please ask him to change. In that case, central government will order the new company to change its name. Central government can direct the change of its name if name is identical or similar to an existing company. Registered trademark owner can apply within 3 years of company's incorporation or name change, and company must change within 3 months by passing an ordinary resolution and notify ROC within 15 days from the date of change along with the central government order. If it is existing company similarity, change it within 3 months from the central government order. Once you change it within 15 days, tell it to the ROC along with the central government order, I changed it, you also change it in the register. So what is this 3 years? Consider I already have a company. Now Shashi is formed the similar company name. When he get registered, now within 3 years of he registers his company, I should make a complaint to the central government. Then if you want to change the registered office means there are multiple possibilities. One is you can change the registered office from same city within the local limits from one place to other place, or different cities within the state. Now different cities within the state but different ROCs, or different states. So mainly 3 possibilities are there. Different cities, same ROC, different cities, different ROC, and different states. In that case, you should take the approval of the ROC or regional directorate. When you are going for state to state, RD is required. When you are within the same state, then ROC is sufficient, because every state has separate ROC. So must be established within 30 days of incorporation. That means the moment you start a company, within 30 days you have a registered office of the company. That is normal condition. And company name, address, SIN and contact details printed on all the official documents. Name board in legible letters in English and local language at the office. That means on English and on Kannada in Karnataka. And if you are changing within the city, then BR is sufficient. That means you as a director, you pass a resolution and change it from Basavangudi to maybe Rajajinagar, maybe Electronic City. That's okay. Electronic City, is it in Bangalore? We don't know. Tamil Nadu. Bangalore. Huh? And if you are going outside the city limits, then special resolution is required. If you are changing the states only, then different ROC. sorry, within the state, but different ROC. There are only two states where this provision applies, Tamil Nadu and Maharashtra. In every state, there is only one ROC, Karnataka ROC, Andhra ROC, Telangana ROC. Here, but in Tamil Nadu, two ROC, Coimbatore and Chennai ROC. In Maharashtra, Pune and Mumbai ROC. In that case, apply to RD, Regional Directorate, INC 23. And the moment you get the approval, within 30 days, intimate to the ROC. Then one more thing is also there, that different states, that is also same with respect to this thing. Then if there is any default, 1000 rupees per day up to 1 lakh rupees is the penalty. Registered office should be there for every company within 30 days of incorporation. And you want to change any registered office within the city, pass a BR. City to city within the same state but different ROC, then SR with RD approval. State to state for different ROC, SR, RD approval, Regional Directorate approval. If there is anything, then penalty is there. I thought of giving penalty also in a separate section. Section 20 is penalty, all those things, but I felt no, it gets confusing, so I did not do that. Now shifting of state to state, the same thing is extended here. Approval from central government is required, that is RD, intimate, INC 23, same only. Advertised in two newspapers, one is in vernacular newspaper. What is vernacular newspaper? Local newspaper and English newspaper within 30 days before filing. That means you want to tell, okay, RD shall dispose the application within 60 days of receipt. Then ROC of new state issue fresh certificate of incorporation, because I am moving from Karnataka to Andhra. Now Karnataka ROC will strike off my name, Andhra ROC will issue new certificate of incorporation. Then you want to change alteration of object class. Then compulsory special resolution is required, that is via postal ballot. This is MCQ question specifically. Sir, why this object change? For example, whenever I want to raise the money, I have to tell that for which purpose I am raising the money. In prospectus or anywhere I have to tell. Consider I raised the money of 10 crore rupees for buying a building. I negotiated and I bought the building for 9 crore rupees. Now I have 1 crore rupees extra, but the purpose is already completed. Objective is done. Now if I want to use the same money for the different objective, then I should definitely pass a special resolution by postal ballot. Why that postal ballot? So that people will maintain the not confidentiality. The people who are telling yes or the people who are telling no are held confidential. Because company will not target, board of directors will not target that, oh, you did not tell us, nah, then I'll do. No, that is like an election. We will maintain the secrecy. If the company raises funds through prospectus with unutilized funds, you can pass SR by postal ballot. And you should give a notice, and that should include financial details, proposed change, and justification, impact of assessment. Impact assessment. That means financial details. So total 10 crore was there. Now I am spending 1 crore rupees. 9 crore rupees already spent. Second one is proposed change. Earlier we have wanted for building purchase. Now the money left is I am using it for machinery purchase. Then third one is justification. Why? Because the earlier objective is completed. Now I want to do the money for some other objective. And impact assessment. What is impact assessment? What is the impact the moment you change the objective? It has to be assessed by some independent party. Is there any financial impact on the company? Yes or no? That impact assessment report has to be given. If you remember, we even discussed this impact assessment in section 135, corporate social responsibility. If the spending amount is more than 50 lakh rupees in a financial year and average is 10 crore rupees in the last 3 years, 10 CR, 1 CR, something was there, then you have to get an impact assessment done. And once you change the alteration object class to newspaper, English and vernacular, and in the company website also you have to put it. If somebody does not want to change you to the objective, then you should give what? Exit option. Exit opportunity as per SEBI regulation. SEBI regulation means the price of the share has to be decided as per SEBI. You don't decide if you don't want to continue, I'll give 10 rupee per share, for 1000 rupee share. No, you can't do those things. And ROC certifies and registers the alteration within 30 days of SR filing. Then I think last concept, two concepts. Doctrines are there. Any doctor who is lady is called as doctrine. Like hero and heroine, doctor and doctrine. There are three things which we have to discuss now. One thing we already discussed, doctrine of ultra virus. When somebody goes beyond the right powers given to him. Then constructive notice and indoor management. Sir, what is this constructive notice? Constructive notice is something. 1 second. if you're looking, one second. So, doctrine of constructive notice and doctrine of indoor management. Constructive notice is there mainly for the purpose of protecting the company against the outsiders. Sir, why the company will is being protected by the law? See, section 399 says that all the documents, that is mainly MOA and AOA, are public documents, because any party who want to enter into contract with the company has an option to get those MOA and AOA by paying some nominal fees to the ROC. And any party who is entering into the contract with the company should analyze the MOA and AOA, read it, understand it, then only he can enter into the contract with company. But if somebody tells that, sir, I did not read MOA, I don't care, I assume that you already read the MOA and AOA. That is why if there is some contract which is outside the scope of MOA, then we don't protect the outsiders. It was your duty, because those documents are public documents. So again, I am taking constructive notice, in which the law protects the company against the outsiders. Whenever any party who is entering the contract with the company should have the knowledge of MOA and AOA. This is how you should write it in the examination. So I am taking in the beginning again. Any party who is entering the contract with the company should have the knowledge of MOA and AOA. And if because MOA and AOA are the public documents as per section 399, if any party enters the contract outside the scope of MOA and AOA, company will law will protect the company against the outsiders, as they are available by paying, as they can obtain by paying the nominal fees. But I agree, MOA AOA are the or this public documents. Everything is okay. But there are some documents or some decisions which are taken internal to the company. How does the outsider will come to know it? For example, MOA, AOA. MOA has all the 6 clauses, but MOA does not tell that who is the manager in your company. Manager means normal purchase manager, because that is not as per the MOA, AOA. That is internal to the company. If there is anything which is internal to the company and somebody enters into contract with respect to internal matters, anyway outsider will not have the what is this knowledge of those internal matters. If anybody being cheated, in that case the law will protect the outsiders against the company. That is called as DIM, doctrine of indoor management. When somebody enters the contract with the company without reading MOA, company will protect the company, law will protect the company. But however, outsider is not expected to know all the internal rules and regulations with respect to the company, because of which law will protect the outsiders against the company in case of doctrine of indoor management. But there are some exceptions in case of DIM also. That means I told that DIM is an exception of DCN, doctrine of constructive notice. Now I am telling exception of DIM. Exception of DIM means I am talking about again DCN, doctrine of constructive notice. Exceptions of DIM means the law will protect still the company, not the outsiders. Sir, when? In 3 cases. One is you are having the actual knowledge, or suspicion of knowledge, suspicion of fraud. Third one is forgery. I think I gave an example of fees collection in case of academy. You remember that example? I'm not going to discuss that example again. Doctrine of constructive notice. Anyone who is dealing with the company is presumed to know its public document, that is MOA and AOA, and registered with ROC, because they are registered with ROC. Whether a person actually reads them out or not, they are considered as aware of the content. That means we consider that he is having the knowledge of all those things. So indoor management, you can write there, law protects the company here. Here it protects the outsiders dealing with the company in good faith. Good faith means genuine. Internal affairs of the company are not public knowledge. Outsiders can only assume company's intentions. Without this doctrine, a company could have evade creditors by denying officials authority to those things. But some exceptions of indoor management is there. One is if outsider known of an irregularity, then indoor management does not apply. Outsider could have easily discovered the irregularities. When I say knows, that means it is actual. Then it is what is the second one? What are the 3 things in that? First one is actual knowledge of fraud. Second one is suspicion. Suspicion, right? What are the exceptions of them? Uh, Negligence. Negligence means easily discovered, but he neglected it. And forged documents. For all those things, it is not applicable. The remaining two things are extra. They have given. Then last, serving of documents and authentication. What do you mean by serving of documents? There are two things. One is sending of document. Second one is serving of document. Sending of document tells that you just posted that your work is done, you sent it. When I say serving of documents, you sent it, the other party has received it. That is called as serving. Sent plus receipt is called as service, and just sending is called as sent. Sent plus received. Serving of documents to the company. A document can be served on the company or its officers at the registered office by send a RP, SP or courier service. That means anything, even private services also included, or you can leave at the office. That means you come to the company, you leave at the office and go away, or you can send it by electronic mode, that is email, etc. Serving of documents to ROC or member. So once outsider want to communicate to the company, this is what is this? Member or outsider to company. This is there. Here, company to ROC. That is what we are discussing. Post, registered post, speed post or courier. If you look at the first part, normal post is not there. Normal post means taking and putting in the red box. That is not there for me as a person to communicate with the company. Deliver at the office or address, electronic mode if it is presumed. Only thing is here, this is extra. For Nidhi companies, if the members are holding more than 1000 rupees or 1% of the paid up share capital, then that has to be served directly, others by public notice in local newspapers. That means whenever Nidhi company want to give notice to members, members are of two different types. Sir, I am holding only 500 rupees worth of shares of a Nidhi company. Then Nidhi company is not required to give the notice directly to him. Sir, I am holding 1500. Okay, Nidhi company has to compulsorily directly give it to the notice to the more than or equal to 1000 rupees people. But sir, less than 500, you don't need to give direct notice, just give advertisement in newspaper, that's over. 1 rupee, 2 rupee, up to 1000 rupees, let them take care by newspaper. For more than 1000, then what is this? Direct notice. Nidhi company which is established for the purpose of savings, increasing the savings. I gave an example of SKDRDP, Dharmasala Sangha, where that 10 group of women will save weekly or monthly some money, and they'll give the. That means it is main motive is to encourage the people to save the money and do the investment, get it, help one another. That is what Nidhi company mainly. For Nidhi company, there are multiple conditions. You remember 3 conditions. Anyway, we in audit subject we discussed in Caro, class 12. 1:20. Net owned funds to deposit ratio 10% unencumbered deposits, and no default in repayment of interest or deposits. Then effect of service. Service means what? I sent, other party received. That is what service. I say it is sent plus receipt. Notice of meeting by post. Service effective 48 hours after the posting. That means I sent it today plus 24 hours plus 24 hours. Then only service can be effective. Service means service is completed, sent and received. Other documents, service effective at the time of delivery in ordinary course of post. That means when I sent, other party actually delivered, that is what it is considered as serviced. If it is by meeting, you remember 21 clear days of meeting. If it is sent by post, 48 hours of the transportation has to also has to be added. That is what they have given here. Then authentication. Sir, authentication means approving, signing. Who is giving the right to it? For example, me signing my checkbook is called as an authentication. Similar way for documents. Documents requiring authentication by the company may be signed by either KMP, all those people, CEO, manager, MD, or company secretary. Actually, not there here. They'll exclude it. But as per definition is included. And whole term director, and not more than one level below the director's part, and officers are employees who is direct authorized by board of directors. Then common seal and authorization, company, it is up to company can have the common seal. If it is having, company can authorize any document by executing the deeds via common seal. It can be done. If there is no common seal, then two directors or one director plus one company secretary. And the moment it is signed or an authorized attorney, then his seal binds the company. Is actually not seal, it's sign. Binds the company. This is the authorization and common seal. Is it mandatory to have the common seal for the company? From 15 section, it is not mandatory. Then some exam tips. This is what it is important from chapter 2. Please have a look into it. I'll give a minute of time. Around 10 pointers are there. What is it? Okay, section 19 is important. Okay. What is 18? Not important. You can leave that. So section 19 is there. Here, the section 19. It is subsidiary company not to hold shares in its holding company. Sir, can I hold the shares in some other company? Yes, you can hold, but your holding company you can't hold the shares. And but there are some three exceptions. Sir, what are those three exceptions? Sir, I became subsidiary in 2025, but before that only I am holding some shares of the company. That means the before a company became its subsidiary company, it's already holding the shares. Yes, it can still continue to hold those shares. That one option is there, but only one exception for that is you have the shares, but you can't vote in the holding company's meeting. Shares ಇಟ್ಕೋಬಹುದು but vote ಮಾಡಕ್ ಬರಲ್ಲ ಯಾವ ಮೀಟಿಂಗ್ ಅಲ್ಲೂ. Second one is subsidiary company is holding the shares of holding company as a legal representative of the deceased member. One is before it's become subsidiary. Subsidiary. Second one is as a legal representative of deceased member. And third one is, what is the third one? As a trustee. As a trustee. These are the three exceptions where you can hold the shares of the holding company as a subsidiary company. That's it. I'll give a minute. Go through these key exam tips. Online you can pause and go through. Go through like that. Done, guys. Shall we go to the question bank and see some questions? So we have 19 questions here. Actually, question bank will be available in LMS. ಅದು ರೀಸೆಂಟ್ ಅಲ್ಲಿ ಅಪ್ಡೇಟ್ ಆಗಿಲ್ಲ ಇದು, ಬಟ್ ಮೇ ಬಿ ಫಾರ್ಮ್ಯಾಟ್ ಚೇಂಜ್ ಇರಬೇಕು. ಇದನ್ನ ಐ ಅದು ಗ್ರೂಪ್ ಅಲ್ಲೇ ಇದೆ. ಸೊ ಐ ಫ್ರೆಶ್ಲಿ ಪ್ರಿಪೇರ್ಡ್ ಇಟ್. ಆಗಿದ್ದಂಗಿಲ್ಲ, ಮೇ ಬಿ ಮಾಡ್ತಿರ್ಬೋದು. ನಿನ್ನೆ ಸಂಡೇ ಇತ್ತಲ್ಲ, ಇವತ್ತು ಮಾಡ್ಬೋದು. So in Jan 26, they asked the question. See, whatever it is there here is not the question. It is a summary of question. Main what they are focusing on this. Question start from here. Everywhere I made it almost exam friendly only here. I think I should change the color of this. It looks like normal question. I'll make it as red color, orange color, something, so that I will feel something else. I had done that, but actually it is not included here. See, here in answers it is there, but there that is answer 4.20 free reserves definition part main is there, section 243. The answer starts from here. Here also this is mainly with respect to variation of shareholders right, section 48. Illinda answers 5. Answer part is different. Answers is there in green. That is there in black. Green and blue I wanted to keep it for answer. For questions it is there. You'll understand whether it is question or answer. It is questions here in footer it is given. If you come to the answer, here it is answer. And if you want much more classification, you can see here. See, chapter 2, 19 questions are there. Questions page number, that means questions part page number from 2 to 7 it is there. If you want to answer, go to the page number 66 directly. These are the questions and these are the answers. This chapter question, this chapter answers. So the first question is, a group of 5 personnel professionals, not personal, professionals decided to start a private limited company in the financial consulting space. That means they want to start some consulting private limited company. They have zeroed uh, in on the name Infinity Advisors Private Limited. Zero means decided. Explain the step-by-step procedures for incorporation of a private limited company in India, including compliance requirements related to name registered office, MOA, AOA, and certificate of incorporation. Same that Spice Plus from INC32. You remember the same things. First, company has to make an application in run farm reserve unique name. Once the name is available, within 20 days, company has to register. Members, promoters have to register the company. They have to file Spice Plus form, that is INC32. State signed by MOA signed by all the subscribers of MOA. Again, they have to give a declaration stating that the professional CA, CMA advocate, everything is complied. See, whether it is private company, public company, any type of company, same procedure. Only for Section 8 company, that central government license has to be added extra first before starting the company. After declaration, they have to give some details of the promoters and first director. That name, address, mobile number, details, correspondence address, parents' name, nationality, date of birth, email ID, everything has to be given. After that, you should give, if there is no registered office, what is this? Correspondence address till the registered office is established. All those things has to be given. One is for name, second one is for registered office has to be there. MOA and AOA. You don't keep on writing that MOA clauses. MOA should consist this clause. Adar ಮೇಲೆ ಇಲ್ಲ question ಇಲ್ಲಿ. Question ಇರೋದು incorporation procedure ಮೇಲೆ. So MOA has to be signed by subscribers of MOA. That has to be there. Then certificate. If the ROC is satisfied with all the documents, it will register all the documents and issue something called as SIN number, corporate identity, along with certificate of incorporation, COI. If you want, you can go ahead and start write that if the company has incorporated by giving a false information, that it can revoke the license or can strike off the name or declare the member's liability as unlimited, that can be written. That is what it is there for 5 marks. Is it okay? So what is the page number? 66, I think. For your easy reference, I gave it as if it is chapter 2, na, question is chapter 2.1. The moment you go to other chapter, for example, it is 7 chapter, 7.1, 7.2, how it is there. The answers are also in a similar line. Chapter name and their number and their question number. This is suggested answer, part B. Step-by-step procedure for the private company. Okay, they have added 2 points extra here. The moment you wanted to become a director, you should have a DSC and DIN number, direct identification number and digital signature. These two are compulsory. Then they started with name reservation, MOA you create, file Spice Plus form, and once that is satisfied, issue certificate of incorporation SIN number, and registered office has to be done within 30 days of the incorporation. This is what the procedure. Question number 1. See, remembering part you have to do it at home. See, if we discuss second chapter, maybe some 10 questions to 10 to 3 chapters, go home and revise immediately. That will be easy for you to remember the next thing. Then one question asked in September 25 is Jan 26. Shira Bookmarks Limited, a public limited company functioning for over 25 years, came across companies with identical and similar names. The board seeks advice on the conditions under which name applied for a new company can be considered identical to or nearly resembling to the name of an existing company. First question. Second question is what recourse? Recourse means uh, options or solution is available if the company's name is identical similar to that of the new company incorporated later. Make application to central government within 3 years, then central government can give the order. Within 3 months you should change the company. Then you should intimate to the ROC. ROC will correct it. So the similar thing is there. I'll try to open one more part. is mainly section 16, the rectification of name. Where a company is registered with the name that is identical or too nearly resembling to the registered trademark, central government may direct the company to change its name within 3 months. If yes, central government can direct UINA, Infra Project Private Limited, to change its name. The company's name resembles Mr. X registered trademark. Okay, sorry, I am reading third question. That is 2.3. Here also same answer only, 2.2. A name shall be considered as undesirable. That is what I am talking, undesirable word. If it is identical to or nearly resembling to the name of existing company. Factors are phonetically similar name. Adding the words like new, India, modern does not make it distinct. That means you have Reliance in company. I write it as India Airlines company, Reliance India. New, those things, no. Using the plural singular form interchangeably. Name is translation of an existing name. The central government is determined whether the name is too nearly resembling or they'll decide. What options they have is, the central government will give the order within 3 months you change it. If you fail to do that, then a registrar shall allot a new name starting with ordinance followed by sin. Ordinance means it is a order. That means you did not resign to the or this central government thing, then I will only decide and I will give the new name and I will give the certificate of incorporation for you. Then question number 3 is also similar question is only there here. Rectification of name only, I am not reading that. Holding subsidiary part. That is being asked in September 24. Star Furnishing Limited has paid up capital of 1 crore rupees. Home Decor Limited holds 6 lakh equity shares in Star Furnishing. Okay, but the moment you see this question, try to have some chart. First one is Star, right? Star has how much? 10 lakh shares, or you keep it separate. In which Home Decor, HD is holding 6 lakh shares, right? 6 lakh equity shares. And Star Furnishing holds 7% equity shares in Home Decor. Oh, they are only again holding 7% equity share. That means I think section 19 is there. Just now we discussed subsidiary company not to hold because out of 10 lakh shares, if it is holding 6 lakh, 60%, that is more than 50% is there. That means Star is subsidiary holding HD, Home Decor is a holding company. Now is it allowed to, I don't know. We have to read the question yet. Star Furnishing holds 7% equity shares in Home Decor. 2% as a legal representative of a deceased member. Can it hold? Yes. 5% as direct investment. Not possible. When can it hold as a direct investment? Before it has becoming a subsidiary. Examining with reference to the Companies Act 2013, can Star Furnishing make further investment in the equity shares of Home Decor? Definitely not possible. Section 19 prohibits any subsidiary company to invest shares in the holding company. First of all, you write section 19 fully. It is prohibited for a subsidiary company to hold shares in a holding company, but however in the following 3 cases it can hold legal representative of a deceased member and trustee, and before it has become subsidiary it is holding the shares. 3 conditions. Then start writing this thing. Can Star Furnishing exercise voting rights in respect of the shares held in Home Decor? Definitely not. I think direct investment means they might have assumed, I don't know, here not given fully, what is this, before it has becoming a subsidiary. We have to see that. Two, four, right? Star Furnishing Limited is subsidiary of Home Decor, etc. 60% they give entirely thing. You don't write that first, you write the provision first. Section 19 reference they have given. No company shall hold any shares in its holding company, and no holding company shall allot or transfer its shares to a subsidiary company. Both ways is not possible. Further investment is not possible. Cannot make further investment. Voting rights. No voting rights with respect to direct holding. However, 2% voting rights can be exercised out of the legal representative. Cannot exercise for 5%, may exercise for 2%. I am just focused on the concept and the part. Writing part, go through that thing, 63. Then this general meeting is there, that is related to chapter 7. We are not discussing here. quorum authorized representative, section 113 connection is there. Then government company, I think it is 245 MCQ may ask, they can ask descriptive also. XYZ Limited is a company with 51% of its equity shares held by state government. That means more than 51, more than or equal to 51. More than or equal to both are there in case of government company, but in case of subsidiary company only more than is there. Determine whether XYZ Limited qualifies as a government company. Yes, because more than or equal to 15% that has to be written. When it is asked, RTP May 26. That means your examination RTP. Company and explain the relevant provisions of Companies Act regarding the government companies. You can write that. Don't forget to write that subsidiary companies of government companies also considered as government company. That online we discussed. Then OPC, nominee or OPC conversion is given here. RTP September 24 is there. I'll not discuss anything. I'll see what can be discussed. This year, separate question they asked. ABC Private Limited, a company operational for 2 years. That means that is already registered from 2 years. Was found to have obtained its certificate of incorporation by furnishing false information. The ROC has received a complaint in this regard. Advise the provisions of section 77. That means punishment for falsely incorporating. That has to be written. For wrongful incorporation, 4 points at least has to be written. If it comes, either it comes for 3 or 4 marks. Because there are only 4 marks. 4 points. One is declare the members liability as unlimited, break up the name, make the members liability or this winding up, and what is this, amalgamate or merge with some other company, or as it deems fit it can order anything. These 5 points has to be written. Small company holding definition as given. You can go through that RTP May 24. Subsidiary company, small company. See, small company can't be a subsidiary, small company can't be a holding company, small company can't be a section 8 company. You remember these 3 things. Don't forget. Small company filing of financial statements. Here I don't know, I don't want to read entire statement. I just want to tell that because financial statements and small company is there, cash flow statement is part of financial statements. But filing cash flow statement is not required for small company, dormant company and OPC. That exception is there. Don't forget that. So on the basis of small company, remember 4 crore rupees not exceeding 4 share paid up capital and not exceeding 40 share turnover. Both conditions satisfied, then it can be a small company. The moment it is other way, it is other than small company. MTP1. MTP1 means there are 8 papers, out of which in the first MTP question, question number it is, I removed it. Actually, it was written question 1, 2, 3, 4. I removed it. It is from MTP1 question. Deemed public, applicability of Companies Act 2013, deemed public company. What is this question? It is 5 marks question. It is also 5 marks question. See, the moment it is case study question, whether it is 2 marks, 3 marks, 4 marks, 5 marks, doesn't matter, PFC format. If it is 5 marks question, compulsory, whether direct or indirect, case study, PFC format. So, direct question is a provision in there. For example, they asked features of the company. The following are the features of the company, provision. That's it. Or you write the definition of company and following are the things. So, this one. So, cross limited is there. Company incorporated under 1956 Act, that's okay. When I say limited, it is public company because the name of the company is ending with limited. XYZ Private Limited, this is private company. It is registered under Companies Act 2013, that's okay, doesn't matter. XYZ Private Limited has issued 1 lakh convertible preference shares carrying right to vote and 10 lakh equity shares of 10 each fully paid up. Cross Limited is holding all the preference shares and 1 lakh equity shares of XYZ Private Limited. Examine whether provisions of Companies Act 2013 are applicable on Cross Limited. Cross Limited is what? Cross is okay. Cross Limited. It is holding in XYZ, right? Cross is holding, XYZ is holding. Cross Limited is holding, yes. All the preference shares it is holding and 1 lakh equity shares. I am concerned with only 1 lakh equity shares. Because ownership is decided based on equity shares. Even though preference shares has a voting right, they are not the owners. That is not the concept for anything. So how many equity shares are there? 10 lakh equity shares are there, out of which 1 lakh equity shares. That means 10%. Now applicable on Cross Limited, no, what is this? Can the subsidiary company, holding company, that provision not applicable. XYZ Private Limited is a public company as per the section 2013. Now there was one more provision which is I did not give here. Actually, that was the depth concept. They tell that whenever you are a subsidiary company of a public company, you may be a private company or any company. A private company, if it is a subsidiary of a public company, then that private company is considered as a deemed public company. Not public company, but deemed public company. Here that is not possible because it is not a subsidiary company, first of all. Understood the thing? This is mainly based on, here it is there, deemed public company. You can write, in main book we discussed, if the private company is a, you can write it somewhere, if a private company is a subsidiary of public company, then private limited company is treated as deemed public company, DPDC. Then conversion of public company into private company. Oh, that private company definition only. That box we had in the our question bank, here it is separate. See, directors are and relatives 20, employees 15, ex-employees 20, joint shareholders 20, others are 150. How much it happened? You tell me. Directors 20, employees 15, ex-employees 20, then joint shareholders, that is 20, 10 into 2, and others is equal to 150. Total how much? 20, 20, 40 plus 20, 60, 150, 210, 225 it happened. Now they want to convert into the private company. They are asking, is it required to reduce the number of members? That means maximum number of members is private company is 200, but actually 225. Do we need to remove 25, make it private? For that we have to analyze the private company definition. For the purpose of counting 200, you don't count 3 people. That means this 15 is not counted, 20 is not counted, this 20 is not counted, this 10 is counted instead of 20. Giant shareholders are 10. That means 20 plus 10, 30 plus 150, 180. That means there is no need to reduce the number of members, as the total number of members as per the definition of private company is only 180. That is the answer. Understood? Giant shareholders are, see here, 10 shares, 2 giant shareholders are there. That means one share na everybody hold ಮಾಡ್ತಾ ಇದ್ದಾರೆ. Still we will consider it as single member. That is why it is instead of 20 members we will take it as 10 members. Giant holders are there, those giant holders are considered as single member. That means 10 into 2 ಹೋಗಿ 10 into 1 ಆಗುತ್ತೆ. Subsidiary holding shares in holding company, question number 14. That means it is section 19 based. You can read that later. Again 15, same question, MTP 5. Section 8 company, who can get a license? Explain the provisions of Companies Act 2013. Who can get a license to operate a section 8 company? You can write anything. Any company which is having an objective of charitable, art, science, culture, all those things, definition you have to write and can get the thing. Then revocation of license of section 8 company, if it is contravenes the provisions, or if it some 3 points are there in that, just now we discussed. Promoter definition they asked. Social chartered accountant and MBA by profession, has been appointed as an executive director on the board of XYZ Limited. His job profile includes advising the board of directors of the company on various compliances matters, strategies, business plan, risk matters, etc. Keeping in view of the above position, whether Mr. Kushal can be classified as a promoter of XYZ Limited, examine the same under the provisions of Companies Act 2 bracket 69. Promoter. It includes all the people, CEO, CFO, CS, everything, but any person who is acting in a professional capacity is not considered. That is about chapter number 2. No, specific to the provision. For example, in the public to private company conversion, there were 3 points. One is restriction the right to transfer the shares, prohibition to invitation to the public to subscribe the shares. Third one is number of members are limited to 200 except in case of OPC. Here that is mainly tested on number of members. Don't write the first 2 points, you write only directly third point. If you have the time, you can write those two also, that is okay, but you can directly writing third point, will not deduct any marks. That is allowed. Chapter 3. Prospectus and allotment of securities. It is just the overview of the chapter, does not have any relevance with respect to me. To look better, I just gave it. Instead of empty space, I give something. Understanding? For 2 chapters, in our regular class, we would have taken at least some 10 hours. At least 10 hours we would have taken. Now it is around 2.5 hours. That is why we can reduce that 100 hours class into 20 hours marathon. Uh, uh, Obviously, if you don't attend that 100, this 20 is useless. That is always plays a biggest role everywhere. Regular class attending. That to 15 chapters, sir. Kelkatam 15 chapters plus question bank. Around some 280 questions are there. See, I feel this is very effective, provided that you attended. Whether you understood, whether you listened to the class, that's okay. But at least you attended that 100 hours. You feel like something I have listened somewhere. So that connects to these dots and you get some benefits out of it. So chapter 3, prospectus and allotment of securities. Mainly we talk about 2 things. When you are already a company, for the purpose of running your business, you can raise capital in multiple ways. One of the way of raising the capital is by way of issue of shares, or you can go to the bank, raise the loan, or you can issue the debenture to the public, or you can accept the deposits. Many ways are there. One is issue the shares. So a company, as a company, how many types of things you can do it for the by of issue of shares to raise the money? That depends on what type of company you are. If you are a public company or if you are a private company. So a private company can issue the securities through mainly 3 things. Either they can go for private placement, that is as per section 42 of the Companies Act, or they can go for issue of rights issue or bonus issue of the thing. Private placement issue, rights issue, bonus issue. If it is public company, it can do all the things along with public offer. Public offer is what? 3 things: IPO, FPO, and OFS. So public company can issue private placement, that is 42, and rights issue, bonus issue, along with that prospectus, that is public offer, IPO, FPO, and OFS. They may ask an MCQ question here. Public company can issue securities through dash. A public offer, private placement, rights and bonus issue, and all of the above. It is all of the above, everything. Or they can offer other thing. This is section 24. Okay. Then comes what is public offer? Any offer made to the public by way of three things are called as public offer. Public offer, public company issue of securities ಒಳಗಡೆ public offer concept ಐತಲ್ಲ ಅದರದ್ದು ಹೇಳಕತ್ತಾರೆ ಈಗ. IPO, FPO and OFS. Sir, what is the difference between IPO and FPO? When the company is issuing the shares in its lifetime for the first time in its life for the public, it's called as initial public offer. Sir, last year I already issued. Current year also I am going for issue of shares. It is further public offer. IPO and FPO. Initial and further. Sir, what is OFS? I am a director of the company or promoter of the company. I also have some 20%. Now I want to, what is this? Dilute my shareholding. Dilute means I want to sell my shares and I want to get my personal money. In that case also, now company is not issuing shares to the public. Company is taking from the directors or other party and giving it to the public. That means company is not issuing the new securities. Company is just acting as a medium of transfer of shares from these promoters to the outsiders. That is called as offer for sale. That means the shares which are already there, I am offering it to the sale now. But when the company does all these things, company will incur some expenditure, prospectus, all those things. That expenditure has to be reimbursed by the people who are selling the shares to the company. That is called as OFS, offer for sale, by an existing shareholder through a prospectus. What is securities? Securities is a broader thing in which it includes shares, stocks, bonds, debentures, or other marketable securities. Any securities which you can buy and sell from one party to other party is called as securities. It also includes even derivatives, mutual fund units, and government securities also. And even units from CIS, Collective Investment Scheme, are security receipts which are under Surface Act. But it will not include instruments providing combined insurance and investment facilities, mainly ULIPs. Are not securities. ULIPs are what is this? This is life insurance policy. Unit linked life insurance policy. This is. That means some units, security units or mutual fund units, they linked it and they are giving insurance also. So it is like what normal insurance company does. Insurance company receives the premium. If something happens to you, they give the money. The return, no, not there. If you don't die, maybe it's 20 years insurance policy you taken, don't die in 20 years. At the end of 20th year, you get entire thing at maybe some normal interest rate. Here what happens, unit linked insurance policies, they buy some securities from your premium. If they get some dividend or some extra money, that will also be distributed to you people. That is why it is unit linked insurance policy. That means it is like an investment plus life insurance. Two categories are there. It is not included securities already. Now comes important part, prospectus. It is an important 5 marks question they can ask. What is prospectus? Prospectus, any document which is described as prospectus is prospectus. Who is Veeraj? The person who tells his name as Veeraj is called as Veeraj. Any document which is issued as a prospectus or described as a prospectus is a prospectus, as well as it includes RHP, self prospectus, or any document issued by the company for the purpose of issuing the security to raise the money is called as deemed prospectus. Sir, but you did not tell this one, abridged prospectus, because abridged prospectus is not a prospectus. Abridged prospectus is a summarized version of the prospectus. So, what matters has to be stated in the prospectus. This is important. Mainly, okay, whatever it is given in this table, table number 2 itself is full important. If a question comes, mainly targeted area is this part. What are the matters that has to be stated in the prospectus? Mainly prospectus has to be two things. It should be dated and signed. See, I wanted to show those prospectus again, public offer, private placement, everything here also, but we showed it in the class regular. But here, lack of time, I don't want to get into those things. And you should state such information or reports on the financial information as specified by SEBI. If the SEBI told you should give the sales, you should give the purchase, you should give the last paid up share capital, turnover, profit, everything that you have to give that. You should include a declaration about the compliance with the Companies Act, SACRA, Securities Contract Regulation Act 1956, Securities Exchange Board of India Act 1992. All those acts you have to comply because securities, these are the main three acts, and it should be signed. And that signed copy has to be filed with ROC before issuance of the prospectus to the public. Signed by all directors or authorized representatives of the directors. The moment it is filed with ROC, within 90 days you should issue that prospectus to the public. 90 days is valid. This 90 days validity can be asked as an MCQ question. Prospectus is a prospectus which is stated as prospectus, and that includes RHP, everything. Later coming back, it should be signed and dated compulsorily. Then it should include such information, financial information which is specified by SEBI. It should comply with the three acts: Companies Act, SEBI Act, and SACRA Act. And it should be signed by all the directors or any authorized representative. And that signed prospectus has to be given to the filed with ROC. No, that is filed with ROC. Once you file, within 90 days of filing, you should issue the prospectus and issue the securities to the public. That is post 90 days is post filing criteria, not the filing criteria. And expert statement. What is expert statement? See, mainly in case of IPO, what happens? You are going for the first time for the public. Now, at what price you have to issue the shares? You are not expert in that. Sometimes company will take an expert thing, this help in that while determining the price, number of shares, valuation of company. In that case, should you publish that expert statement in the prospectus or not? It depends. If you taken a written consent from the expert as a company that I want to include your statement in a company's prospectus, and that written consent given by the expert is not withdrawn by him. You've taken a written consent and it is not withdrawn, then only you can publish that in the prospectus. So that is valid only if expert is independent. That means you can't take employee of the company as an expert and write it. You can't take it because threats to the independence. Independence is not there. In mainly we discussed in audit. Here also, when it is not independent, there is no use of it. Expert provides a written consent that is not withdrawn before filing, and declaration by expert is included. That means whatever the declaration, as far as my knowledge concerned, whatever the details given to me, based on which this is right. If there is something which is hidden from me, which is not given to me, then this statement is not right. The declaration has to be given by the expert. Expert means includes engineer, valuer, CA, CS, CMA, and authorized to issue the certification. Any party who can issue the certificate is called as an expert. Go through that part. Let me have a copy. Please go through the above things till that part. Online, you also go through. Online people, you want to drink the tea or coffee, you can drink. Offline, no have no option. out of the market. 1 lakh crore rupees because of the fall of market. Huh? It's war only. Money. You can invest. There is always a limitation. The investment bankers, all those people are there, they can do it. See, even I invest and make 100% profit. Consider I invested 1 lakh and made 100% profit. It has become 2 lakh. If you invest some 1,000 crores and make just 10% profit, it is 100 crores. It is a matter of not percentage, it is a matter of capital you invest, quantum. Actually, whatever the stock I had, I sold it on the day of war, next day of the war. Monday. War was started on Saturday. Friday after closing the market, then I already sold my portfolio at 10% loss. Now, if I had that, then that would be 40% minus, at least. Hmm? Ninda, rich people can take the loss. Again, when it goes down at that point of time, then again we add it, then that increases. Huh? No. See, not at the time of incorporation. Whenever you are getting incorporated, consider public company number of members is how much? 7. At the time of incorporation, compulsorily you should take 1 shares so that you can become a member of the company. That is not called as IPO. After the incorporation, the moment you issue the shares first time, that is called as initial public transfer. After 10 years also, 20 years also doesn't matter. First time issuance to the public. Further means second time and later, subsequent. Again, now we'll continue. Now we will discuss types of prospectus. How many types of prospectus are there? Prospectus are of mainly 4 kinds. Self prospectus, RHP red herring prospectus, published prospectus, and deemed prospectus. First, we will discuss red herring prospectus. First, you should understand the difference between all the 4 prospectus. Red herring prospectus is a prospectus because they can ask an MCQ question also in case study, or they can ask a 5 mark separate question also. Red herring prospectus is a prospectus which is issued by the company but does not contain all the information with respect to the price and quantity of the securities being issued. Generally, red herring prospectus is issued based on a book building method. There's a word called as book building. You should use that word, book building method. Sir, what is that book building method? Book building method is something in which they give us a range of price. One share may be from 95 rupees to 110 rupees. Sir, is it 95, 96, 100, 110? No, we don't know. Once the shares are issued, prospectus are issued, at the time of allotment, they'll come to know what is the price. Our quantity is not specified. If such information is missing, that information, that type of prospectus is called as red herring prospectus, RHP. Sir, what is shelf prospectus? Shelf prospectus is a prospectus in which where company want to issue the share but does not want to issue all the shares in the same time. They want to issue multiple issues in the same year, single year. In that case, generally before, like outside the concept, any prospectus which is issued by a company generally is around 400, 500 up to 1000 pages it is there. Consider I issued in the month of April. Again, I am going to issue in the month of June. Again, so much of time, so much of content, so much of money waste. That is why where a company want to issue multiple times, multiple issues in the same year, then companies are told that, okay, don't worry. When you are issuing the first time, you file with ROC something called a shelf prospectus. And whenever you are issuing for the second time, third time in the same year, you file something called as IM, Information Memorandum. So that you give the new issue details, and from the last issue till this issue, what is the change happened in the company? Profit, directors, any change happened in the company, you intimate in the memorandum, information memorandum, and issue it. Again, third time you want to issue the same information memorandum, give the link to the prospectus, whatever the change happened, give it there. Again, next issue. And the shelf prospectus which is issued is like valid for only 1 year. Sir, current year January I issued, next year February I want to issue the shares. Yes, one more prospectus has to be compulsorily issued. Only 1 year. That means January to December. Jan, Feb, March, one more prospectus. You know shelf, like shelf, it is there in the rack type. The similar way. First thing happened, again second rack, third rack, multiple issues kind of thing. That is why the word shelf has been used by them. Then comes abridged prospectus. What is abridged prospectus? It is the summarized version of the prospectus. It is not the full prospectus. See, when a company want to issue the prospectus has, okay, for your information, I'll show one prospectus, maybe. I'll take, this is Geo Financial Services. You know how many pages it is there? 426 pages. And look at the font size, how small it is. Maybe 5, 6, 7, 8 font size is there. Look at our material font size, and look at the Geo Financials. It is still small font size with so much of things. That means whenever they want to go issue multiple prospectus, okay, they want to issue the prospectus. Consider they issued a prospectus, it is around 500 page, we'll take it an average. If they want to issue, consider I came as a member, they issued me 500 page, again 500 page, some 1 lakh people has come. That means 1 lakh into 500, 500 lakhs, 5 crore pages, that is gone. Waste of money, waste of resources, no? Simply give something called a summarized format. This money share, this is the profit, this is the director, this money, this is the face value, this is the issue value, this is the market, everything you give it in a summarized format. Once somebody is interested, let them come to the company, make an application to get the full prospectus. Then you give the full prospectus. If not, don't waste resources and time. So abridged prospectus is some summarized format of the prospectus, which contains only salient features of the main prospectus. When somebody comes to the company for the purpose of having, then you can issue the full prospectus for them. Then last option is the deemed prospectus. What is deemed? Deemed means it is an assumption. If you and me make something, we call it as assumption. If law makes some assumption, that is called as deeming provisions. So company did not issue prospectus. Company issued some notice, one paper they issued to issue the shares. Is it a prospectus? Yes, that is what comes under deemed prospectus. Any document, any circular, any notice, anything issued by the company as a prospectus, telling it as a prospectus, that is prospectus. No need to issue separate that 500 page document. So see there, discuss one by one. It allows a company to issue securities over a period without a fresh prospectus. What is over a period? 1 year each time. And that filed with ROC at the time of first offer. Whenever you are going for first offer, then you have to file that prospectus with the ROC, and that is valid up to 1 year from the date of first offer. It is not actual 1 year, it is up to 1 year. You can take up to 1 year. For subsequent offers, file IM, Information Memorandum, within 1 month prior to the next offer. You want to issue in the June 1st, then within 1 month before that, you have to issue that. If the applicant wishes to withdraw after changes, then company must refund the money within 15 days. That means I made an application based on prospectus, they changed my mind later. I don't want to subscribe your shares. Yes, within 15 days, you have to refund the money. That is there. I'll connect that point again to the issue of securities. Red herring prospectus does not include full details about the price and quantity of the securities. Remaining thing, everything is there. Filed with ROC at least 3 days before the opening of subscription list. This is an MCQ point. And this 1 year is also an MCQ point. ಹ್ಮ್ ಎಸ್ ಮೇಲ ಹಾಂ ಯಾವುದು 1 ಮಂತ್ ಯಾಕೆ ಬುಕ್ಕಲ್ಲಿ ಬೇರೆ ಇದೆ 1 ಮಂತ್ ಇಫ್ ಇಟ್ ಇಸ್ ದೇರ್ ಇಯರ್ ದಟ್ ಇಸ್ 1 ಮಂತ್ ಓನ್ಲಿ 30 days is different from 1 month. February has 28 days, that is also 1 month. And if there is any difference between red herring prospectus and final prospectus, that shall be highlighted and variations. That means if we issued something which is missing, later we should file final prospectus once the shares are issued. At that time something has changed, some director died, something happened, then you highlight that issues. After the after close, the final prospectus has to be filed with ROC SEBI containing the total capital raised, closing price, missing details. Whatever it is missing in the RHP, that has to be filed in the final prospectus. So abridged is summary of prospectus containing key salient features of the as specified by SEBI. It is summary, not the full. Every application form for shares or debentures must be accompanied by a abridged prospectus. That means whenever you give an application, give the abridged prospectus. If you want to buy the shares, make an application, get the prospectus from the company. Some exceptions are underwriting agreement, shares are not offered to the public, then offer made only to existing members, then no need to issue the prospectus only because they already know what is there in the company. And any persons can request full prospectus before closing of subscription list. But see, look at the language. Can request, company will not come and give you. You should go and request to the company. Please give it. If there is any non-compliance, then 50,000 rupees for default. Deemed is a document by which an offer of sale to the public is made, treated as a prospectus. Allotment treated as public offer if securities offered to public within 6 months of the allotment and full consideration is not received. It should be signed by 2 directors or at least one half of the partner in case of the firm. Which firm? LLP, Limited Liability Partnership firm. Misstatements in deemed prospectus attract same penalties as regular prospectus. You can write it as, instead of word A, write it as any document. Any document. In normal metal, it is any document only there. Any document, letter, circular, notification issued. Then advertisement of prospectus has to be compulsorily done. But while you are giving the advertisement, must include object, liability of members, and amount of share capital that you want to raise. Names of signatories to MOA and number of shares they subscribed, and capital structure of the company. Capital structure means in FM you might have studied what is capital structure. How much equity, how much debt, all those structure. That is about the prospectus part. So we can take a small break, then we'll continue, or we'll continue. Break. Okay. We'll take small 5 minutes break, then continue. Only 5 minutes. Don't make some delay. 12:21 now. I'll start at 12:26. 12:27 I'll start exactly. If you come late, it is your loss. Now comes, this is also one of the favorite topic for the examiner. 34, 35, section 34 and section 35. Misstatement in prospectus. What is misstatement in prospectus? Stating miss instead of Mr. is called as miss. Stating something false or inaccurate, either by commission or omission, is called as misstatement. A statement is untrue if it is misleading in the form or context, or if any inclusions or omissions is likely to mislead. If you tell something which is not required to be told, or if you don't tell anything which is required to be told, is called as misstatement. See, there are two types of liability for it. One is section 34 criminal liability, or section 35 civil liability. Sir, what is section 34? Every person who authorized to issue the prospectus with misleading or untrue statement is liable under 447. What is 447? Again, I am telling fraud. Punishment for fraud. That is there. Plus, but some exceptions are there. Mainly two exceptions. If a person proves the statement was immaterial, that means I told something but that was immaterial with respect to anything, then I will not be held liable for anything. Or they had a reasonable grounds to believe it was true. That means as a director, when other person told, sir, whatever we are telling it is true, you can check it, I checked it, I felt it is true at that time, and I signed it. Now later it turned out to be wrong statement. Then also I will be held no responsible for those things. When I did not I had a opportunity of thinking it is true, and actually at that time I felt it as true. Second one is the statement was immaterial. Then one more point was there. One more point was there. It is not given here. You can write it. The third point, where he has withdrawn. Has withdrawn. That means I signed it, I gave a statement, everything. But later, before the prospectus is issued to the public, I have withdrawn my statement. Withdrawn before issue of prospectus. Then also will not be held liable. Loss of misstatement is not necessary to hold someone guilty. Strict liability applies whether intentional or unintentional person is guilty of section 34 as well as 447. Both the liabilities are there because it is criminal liability. See, what is this? Loss from misstatement is not necessary to hold someone guilty. Consider you told something in the prospectus. I invested 10,000, that has become 5,000. Then I collect as it is loss from misstatement. 5,000 has become loss because of your misstatement. That loss need not be there here in case of criminal because of the criminality. But in case of civil liability, loss has to be compulsorily there. That is the biggest difference between criminal and civil liability. Company and every director, proposed director, promoter, expert, or person authorizing the issue shall compensate the loss suffered. No liability if withdrawn the consent before the issue and issued without the authority. That means I was not a right person to issue the or this some statement, but I issued it. Company considered it and went to issue the prospectus. First of all, it is company's fault to consider my statement because I was not the right person. If I tell what is this, some MLA to do something or IAS, IPS officer to do something, and if they did something, then that is their fault. I don't have any authority. First of all, it has to be the government who has to give the order. Or he gave the public notice of unauthorized use. That means, sir, they threatened me and used my statement wrongfully in that case. Or relied on expert statement in good faith. In those cases, you are not held guilty of anything. Then it is the unlimited liability in case of fraud. If prospectus is issued with a fraudulent intent, then personal liability for all losses and no limitation. Here mainly you should remember is 447 is there for criminal liability. Here 447 is not there for civil liability. Then right of recession. What is right of recession? Recession means cancellation. Cancel. Once you have bought something out of the misstated prospectus, then you are having a right. A person who purchases shares based on a misleading prospectus can apply to the court for recession. Not for the company, but for the court. What? Agreement to buy the shares is voidable at the subscriber's option. In foundation, we used to discuss what is voidable contract. That is coercion, undue influence, fraud, misrepresentation, those type of things. In foundation students, anybody there? Anybody cleared foundation? Everything is direct entry. That is why so much of talent. If you buy shares under voidable, that is at the subscriber's option. What is voidable at the subscriber's option? Consider company issued some wrong statement, believing that you purchased it. That means it is like they are influencing you in some way by telling that more profit, more sales, something like that. Then you have an option to cancel it, but the company don't have an option to cancel. Voidable means it is cancelable at the option of one party, but not at the option of other party. It's called as voidable. If it is rescinded, company removes the subscriber from register because I'm giving back your shares, remove my name from the register of members, and return the money with interest. Return the money with interest means from when they allot the shares from that date till the date of rescission. Exceptions are subsequent market purchases cannot be rescinded. MOA subscribers cannot seek relief. Two things are there. Two exceptions. What is this? I purchased. They issued the prospectus by way of IPO or FPO. I made an application of IPO or FPO. I got the shares. I have an option to cancel, resigned. But I sold the shares in the stock market. Shashi purchased it. Now Shashi cannot go and resign that in the company. Subsequent market purchasers cannot resign. Only the first party who purchased from the prospectus can resign. Purchased from the market cannot go. Second one is subscribers of MOA and AOA. That is the promoters. The 7 people or the 2 people who signed that MOA AOA, they can't tell that because those are the persons who issued the prospectus. How can they resign it? That is not possible. So when a statement prospectus is issued with a misstatement, and that misstatement means a criminal or a civil liability, a civil misstatement, then the party to that contract has the right to resign the contract. Once the contract is rescinded, the company has to refund the money with the interest and remove the name of the members in the register. And there are 2 parties who can't resign the contract in case of this thing, misstatement of the prospectus. First one is the subsequent market purchases, that is subsequent purchaser other than the company. Second one is subscriber to MOA AOA cannot rescind it. Then what is punishment for 447? There are two sections of 447. First one is if the fraud 447 is fraud up to 10 lakh rupees, less than or equal to 10 lakh, or 1 crore rupees, whichever is lower, then punishment is different. No sir, more than 10 lakh rupees or 1% of the turnover, then also punishment is different. Again, public interest involved, punishment is different. Public interest in not involved, then punishment is different. Mainly 2 punishments are there. One is monetary penalty, second one is punishment with imprisonment. So the duration of imprisonment changes depending on the public interest. So here, first one is, if you want, you can make a chart. Section 447. Less than or equal to 10 lakh or 1% of turnover, whichever is lower, first category. This is more than 10 lakh or 1% of turnover, whichever is lower. That is second category. Sir, erdo less 1% of turnover, 1% of turnover, no. Consider company has a turnover of 100 crores. What is 1% of 100 crores? 1 crore. I'm taking this part. Or 10 lakh, whichever is lower. That means 10 lakh rupees is the lower amount. Even if you do the fraud of at least 10 lakh rupees, then your punishment is different. Sir, company has a turnover of only 20 lakh rupees. What is 1% of 20 lakh rupees? 20,000 or 10 lakh, whichever is lower. That means 20,000. That means if you do a fraud of 20,000 also there is a punishment, but the punishment is bit different. That means for the purpose of coming here, what is this? Under second category, at least 10 lakh rupees is required or not required? I am asking you. Think and answer. At least 10 lakh rupees is required for the second category, green category, or is it less than 10 lakh also comes there? By looking at the thing, you can tell. It depends on mainly turnover. Less than 10 lakh is also okay. Sir, how? If the company has a turnover of, what is this? 1 crore, consider. 1 crore into 1%, 1 lakh or 10 lakh, whichever is lower. 1 lakh is lower, comes on the right side. Anything is okay. So less than 10 lakh or more than 10 lakh. Somebody did a fraud of, consider, okay, I'll take turnover of the company is 20, not 20 lakh rupees, 10 crore rupees. I did a fraud of 3 lakh rupees. It is punishable under the right side or left side? Hmm? 1% of the turnover. Fraud amount. No, I'm not telling it is not right side. I'm asking you to think. Turnover is 10 crore. What is 1% of 10 crore? 10 lakh. 10 lakh, 1 crore and 10 crore. So 10 lakh. Okay, if I take 10 lakhs, it happens. I'll take 11 crore rupees. What is that? 1% of turnover is 11 lakhs. 11 lakhs. 11 lakhs or 10 lakhs. Whichever is lower. 10 lakhs. That means here, what is the fraud amount? 3 lakh. That means that comes here. If you think, if I tell turnover is 500 CR, fraud is 11 lakhs. Fraud is 11 lakhs. What is 1% of 500 CR? 5 CR or 10 lakhs, whichever is lower. 10 lakh. If the fraud is of 10 lakh, then that comes here. Now, you are understanding? Or I'll give one more example. Fraud is of 1 lakh now. Turnover is 500 CR. You tell me now. Red or green? Definitely red, because 1% of turnover is 5 CR and 10 lakh. Lower is 10 lakh. At least 10 lakh rupees fraud has to happen to come on the right side. If the turnover is only 50 lakh rupees, then fraud is 1 lakh rupees. Now you tell me, it comes on the right side or left side, green or red? What is 1% of the turnover? 50 lakh means 5 lakh, 50 lakh. 50,000 or 10 lakhs, whichever is lower. 50,000. Even if it is a fraud of 50,000, that comes on the right side, but the fraud is 1 lakh here. Yes, it comes here. So you have to first do the comparison of 1% or 10 lakh, then decide what is the fraud amount and put it in the every respective category. Then if it is the case, then what is the punishment? 2 punishments are there. 2 punishments are there. That is, amount is more than or equal to 10 lakh or 1% of the turnover, whichever is less. That means they're talking about the right side or left side? Right side. Okay, I made here one mistake. That is, it is less than 10 lakh. It is more than or equal to 10 lakh. Here equal to is there, not the less. So imprisonment, that is jail 6 months to 10 years. Fine will be 1 to 3 times of the fraud done. And at least the amount involved. That means 1 times and up to go to 3x of the amount involved. That means If it is this category, fine 1 to 3 times of amount. Here imprisonment 6 months to 10 years. Now, if it is public interest involved, that means you cheated public's money. You did a fraud. Then minimum imprisonment instead of 6 months, it becomes 3 years. If public interest involved, minimum 3 years imprisonment. Imprisonment is minimum 3 years. Here, if it is less than 10 lakh, less than 10 lakh or 1% of the turnover, whichever is lower, still lower only, here it is. Imprisonment up to 5 years. See, minimum imprisonment is not there. 1 day also can be there. Imprisonment up to 5 years plus fine up to 50 lakh rupees. Fine up to 50 lakh and imprisonment 5 years. Minimum is not given, maximum is 5 years. This is section 447, punishment for fraud. Copied. Done. Then personation for securities. Purchase of security. Personation of purchase. What do you mean by personation? Tempting somebody or influencing somebody. Personation means influence, induce. Tempt. Then you tempt somebody, see, you purchase the shares, you'll get some 10%, 20, 30%, money will become double, something like that. Then any person who makes application in fictitious names to acquire or subscriber securities, it is different. If different, okay, there are two provisions which is mixed here. What is it? Give me the material. Section 36 and 37 is not given. This is correct only. 38. 36 and 37 is not given. 36 and 37 is tempting some party to do the purchase the securities. Then that is also what I'm meant to tell is, if you tempt somebody or do something with respect to purchase the securities, then you are liable for 447 if they incur any losses. That is also there. You can write section 36. Not important for examination. That's why I did not give. This inducing. You remove this inducing. Inducing a person to subscribe shares. Then liable for section 447. That's it. This is what a line is there. Then personation. What is exactly the word personation means? Become a part of. That means somebody is buying a shares and in a fictitious name and you are becoming part of that. That is called as personation for purchase of securities. Any person who makes application in fictitious names, fictitious means benami, to acquire or subscribe the securities, or makes multiple applications in the different names, or induce company to allot the securities in fictitious names, then also they are liable for 447. That's it. Simple line. And whatever the profit they make, that has to be disgorgement. What do you mean by disgorgement? Take back of gains or seizure of securities credited to IAPF. They can ask this as an MCQ point. See, if you becoming part, consider some party is making an application in some persons who are already died, fictitious name, or the persons who are not there only, and you are also becoming part of it. I'll also share the profit. You'll become. Then, if you make any profit out of it, you have to return that money to the government, and that will be credited to the IEPF account, Investor Education Protection Fund account. That is for section 38. Then, next concept is minimum subscription and allotment. Minimum subscription and allotment. You tell me how much is the minimum subscription the company has to get to allot the shares. Consider I issued some 100 shares. The moment the issue of shares is there, public has to subscribe minimum how many shares. If it is subscribed, then only I can allot the shares. At least 90%. Company cannot allot the securities unless applications received equal to or more than the minimum subscription. That is not less than 90% of the issue size. Application money paid and received via check or other instrument at the time of application. That means either you receive check or anything, but at the time of application only you have to receive. But you tell me, you may issued some apply or this shares, but the public did not subscribe only 80%. Then can you allot the shares? No, as per Companies Act only, I'm talking. You issued 100 shares, but they subscribed only 80 shares. Can you issue the allot the shares now? You gave 100 applications to issue, but subscribed only 80. That means 80% can they can as a company can issue the shares? You can never issue because minimum is 90%. If 90% is not complied, then if minimum subscription is not met, within 30 days of issue of prospectus, refund within 50 days from the closure of issue. If issued prospectus on first day plus 30-day wait, 90% application received continue to allotment. If not received within next 15 days, that means 30 plus 15 days, refund the money to the people. Refund credited to the bank account from which the subscription was made. If I made from my bank account UPI card or something, then money has to be refunded back to the same account. And if you don't refund it within the 15 days, then you are liable to pay an interest at 15% per annum. This is also an MCQ point. There is one more point where we discussed 12% interest. Private placement. Section 42.4.2 is at 12.1.2. It is 15%. The moment consider you want to issue the share and somebody has to make an application to buy the share. How much percentage of the issue price has to be made by an application money? That means consider you want to sell a share at 10 rupees. Now application is there, allotment is there, first call is there, second call is there, final call, multiples are there. At the time of application only, how much money you should receive as an application money? Companies Act tells that 5% of the face value. But SEBI tells that 25% of issue price. There is a difference between face value and issue price. Don't get confused. Face value is something on which dividend is paid and which is there in the share capital balance sheet. Issue price is the money total received. That is face value plus security premium. Both. 10 rupees share issued for 100. That means 100 is issue price, 100 into 25, 25 rupees has to be application money. As per Companies Act, 5% of face value. As per SEBI Act, it is 25% of the issue price. MCQ, highly MCQ point this is. Securities on stock exchange. What is securities on stock exchange? Whenever you want to issue the shares and list it, before you want to list and before you want to issue the shares, first you make an application to some stock exchange. There are only two stock exchanges. One is Bombay and National, Bombay Stock Exchange, National Stock Exchange. Where you want to list? Sir, I want to list on NSE. First you make an application of your intention to list your shares on NSE. Once approval is received, in the prospectus only you mention that in which stock exchange you are going to list your shares. So, before public offer, apply to one or more of the RSC, that is NSC or BSC. There are only two things for permission to list and trade. Prospectus must mention the name of stock exchange or exchanges where the securities will be listed, and whatever the money received on application kept in a separate bank account in a scheduled bank. Application money or allotment money, anything that has to be kept in separate bank account. You can't put it under a general P&L account. And that money which is there in the bank account can be used for only two purposes. What are those two purposes? If you allot the share, take and put it under a share capital account. If you don't allot the share, refund it from the same account. Sir, I did not refund from the within 15 days. Interest also. If there is interest in the same account, give it, or if not, bring it from your personal account and put it. Personal account means bank separate account. If the company defaults, 5 lakh to 50 lakh, and for the officer, 50,000 to 3 lakh is a penalty. Not penalty, fine. Return of allotment. What is return of allotment? Return means it is not a refund. Return means income tax return kind of thing, some statement that has to be filed. Company has to file a allotment with ROC within 30 days of allotment, in form number is not required. You should attach the list of allottees. That means to which persons you have given the shares, those persons' names, name, address, occupation, number of securities. And if it is non-cash allotment, that means you issued a shares and bought one machinery, shares issued for a consideration other than cash. Then attach a stamped contract valuation report from the registered valuer. Consider you issued 10 crore rupees shares and bought this building. How can you value this building at 10 crore rupees? Sir, I valued it by some registered valuer. Okay, that certificate you take it, you attach the building papers also, that is in the name of company, and attach it, file it with ROC. If there is any defaulty, penalty of 1000 per day up to 1 lakh rupees. So return of allotment has to be filed within 30 days. See, one common point I noticed in 99% of the cases, whenever company want to communicate to ROC, it is always 30 days. Always means always 30 days. So return of allotment. Every company has to file that return of allotment to the ROC within 30 days of allotment. Again, they have to attach some details of allottees, their contact number, details, address, occupation, number of securities. And if it is non-cash allotment, then they should attach the stamped contract. Stamped contract means the contract which is executed on the stamp paper of the government, not on the A4 sheet, but on the stamp paper, along with the valuation from registered valuer. Then comes, this is also a 5 marks question, many times they asked, that is how much commission that a company can pay. Whenever, see what happens, this underwriting means it is like a middleman for the purpose of sale of shares by the company. When the company is selling the shares now, the main problem is if it is a company already having so much of brand value for it, it does not have any problem with respect to the issue of shares. People is already know the company and they will purchase the securities. But if the company is a new company where public has no trust in that company, but they want to issue the securities, in that case, this underwriter people will come into the play, where they tell that these are some bank kind of thing. They give some guarantee to the company. See, I will take 20% of the shares responsibility. I will try to sell that 20% of shares on behalf of you, but you pay me some commission. Company is asking, so what if you can't sell? Don't worry, I will only purchase those shares. In that case, the highest amount of commission that can be paid. But before payment of commission, you want to pay the commission. Now, first, you have the clause for payment of commission in AOA. Without having the clause in AOA, then you can't pay the commission. Sir, I don't have any clause in AOA. Amend the AOA, include the payment of commission under AOA, then you start paying the commission to the people. That is, for the issue of shares, the maximum commission that can be paid is 5% of the issue price or the percentage mentioned in the AOA, whichever is lower. If they mention 2%, 2 or 5%, whichever is lower, 2%. If they mention 10%, 10 or 5, 5 is the lower, then 5%. Highest commission that can be paid for the issue of underwriting shares is 5%. When it comes to issue of debentures underwriting, then that is AOA percentage or 2.5 percentage, whichever is lower. For shares it is maximum 5%, for debentures it is maximum 2.5 percentage. First of all, it should be authorized by AOA, and it can be paid out of what? Two things. One is issue proceeds. Whenever you issue the shares, you get some proceeds out of which you can pay it, or if you have extra company profit, you can pay from the company profit, or it can be paid out of both also. So how much you can pay for shares? 5% of the issue price maximum, or as per AOA, whichever is lower. For debentures, 2.5% of issue, or AOA, whichever is lower. Then prospectus must disclose the name of underwriters, rate of commission, amount of commission, and number of securities that is underwritten. Everything has to be disclosed. And copy of the commission contract submitted to ROC at the time of filing the prospectus. See, me and ICICI Securities, Kotak Securities entered into contract for underwriting securities. This is the agreement. You file that with the ROC while you are issuing the prospectus, filing the prospectus. This is about regarding the shares, minimum subscription, allotment, commission, etc. So then comes private placement. This is also 5 marks question. What is private placement? Where company don't want to issue the shares to the public in general, but they want to issue some shares to some specified people. So section 42 allows those type of things to be done with the provided it has a clause in AOA for the purpose of issue of private placement. But in a single year, company can issue maximum number of private placements is 200. I'm not talking about 200 shares. I'm talking about shares to 200 people. You can issue 1 crore shares also for every person. I don't care, but 200 members are maximum in a year. But those people is not. Those people has to be first of all identified by the company. I'm going to issue shares to the Shashi again, Gayatri again, Saraswati. I have to first identify the people to whom I'm going to issue. Those people who are identified are called as identified persons. The name is identified persons, and for that they should take a pass a resolution in the company meeting, again authorized by AOA. Many things are there. So an offer or invitation to subscribe or issue securities to a selected group of persons by a company other than a public offer. That means you are not going for IPO, FPO or FOFS. You are not doing anything. You are directly going for some selected people. You only select and issue. Identified persons and limits. Made only to identified persons who are selected by board of directors. Right to renounce is not applicable. Generally, what happens in public issue means, whenever I give the option for you to purchase the shares, rights issue or something, and if you don't want the shares, you can give that right to maybe some other party, Suraj, and he can come to the company and purchase that shares. But in case of private placement, that right to renounce means giving it to some other party is not applicable, because I identified you as a person, you can't transfer it to other party. I want you only, or I don't want anybody. It is like proposing to some girl, but accepted by some other girl. No, no, not required. ನೀನೇ ಹೇಳ್ತಲ್ಲ ಆ ಥರ, that is how it is there. Right to renounce, this can be an MCQ point. And limit of 200 persons in a financial year per type of security. That means you are issuing one type of private investment 200, again one more type of security, that is class A, class B. When I call it as a different class of security, either face value is different or paid up value is different, or preference shares, or maybe debentures, anything, private placement. But whenever you are counting 200, now you exclude two parties. QIBs, qualified institutional buyers, are not considered, as well as employee stock option plans are also not considered. And if the offer exceeds 200%, then automatically it is public offer, deemed, it is treated as public offer. Then what resolutions you have to pass? First, you have to pass a board resolution with an explanatory statement detailing the offer particulars. That means to which party you are issuing, at what price, why you are issuing. Then explanatory statement must also include date of board resolution, what kinds of security you are issuing, what is the price, why that price is being decided, who is the registered valuer, and how much amount you are raising, and what is the issue terms, purpose, and promoter or director contributions. Special resolution approval is required from shareholders. If you are issuing NCDs within the limit of 181C, then board resolution is sufficient. If you are issuing the shares or anything other than non-convertible debentures to private people, identified persons, first you pass a board resolution and attach a explanatory statement to that board resolution. It write the details of everything, name, address, how much shares, what is the price, how much is the total money, what is the purpose, everything. And you go call an EGM, extraordinary general meeting, tell the people, members, to pass a special resolution with respect to private placement. Once everything is done, you can go for issue of private placement. But the SR is not passed, then no need, you can't go for private placement. But if you are going for issue of non-convertible debentures, that means you can't convert the debentures into equity shares. You can only redeem after the expiry of the term, maturity period. In that case, you can go with board resolution, because when I say non-convertible debentures, I raise the money, I issue the debentures, I take back the debentures, I give the money. That means it is like a loan thing. You are not touching any ownership part. The moment you are issuing the shares, it is ownership. The moment you issue convertible debentures, that is also ownership, but not today, maybe after 5 years or after 10 years. That means the moment you are touching my ownership, ask me. That is by a special resolution. If I'm okay, I'll give. If not, no. That is the reason why NCDs are exempted there. Sir, how do you issue it? Whenever you are making private placement offer, along with that, you should give an application letter also. Sir, I want to issue shares to you. Shashi, you take the thing and you take the application also. No, I give an example. Issued within 30 days of recording the name. The moment you identify 200%, the moment I identified, then within 30 days you issue them. And whenever they pay the money, that has to be accepted either by check, DD, or banking channel. So no cash has to be accepted. Even for public offer also it is not acceptable. If it is for joint holder, then payment from bank account of persons whose name appears first has to come. For example, husband and wife is there, husband name is there first, at least in the paper. In the reality, it is not possible. Then the husband, from husband's bank account, the money has to flow. Again, if it is not allotted, go back. Company shall not utilize the monies until the allotment is made, or you can return that allotment which is filed with ROC. Okay. And return of allotment is filed with ROC. See, if the allotment is not happening, then refund the money. If you can't refund within 15 days, interest. But how much interest it is there? Whatever the money you receive, that has to be kept in a separate bank account. And the moment you receive the money, application letter, offer letter, everything, within 60 days you should allot the shares. You fail to allot shares within 50 days, refund the money within 50 days. If you can't refund the money within 15 days, then 12% interest per annum, not from 75th day, because 60 days time for allotment, 15 days for return the money. If you can't allot, 60 plus 15, 75, no. The moment 60 is over, 15 days is given for return. If you fail to return the money, from 76th day, interest is calculated on 61st day. from the expiry of, from the 60th day you are calculated. Then copy of the board resolution and special resolution has to be filed with ROC before offer of securities, and the return of allotment filed with ROC. See, first filing is before you issue the securities to the private identified people, you first file these things, that is board resolution, special resolution. After you allot the securities, you file return of allotment by within 15 days after allotment. If you do any default, 1000 rupees per day up to 25 lakh rupees. Before allotment also some filing has to be done. After allotment also some filing has to be done here. If you don't comply section 42, for company, promoters, directors, the penalty will be up to amount raised or 2 crore rupees, whichever is lower. That is maximum penalty is 2 crores. Refund with interest within 30 days of penalty imposition, and deemed public offer. If the offer is treated as public offer, subjected to all applicable laws. That means you issue more than 200 people, it is public offer. Then automatically all the section provisions of section 23 is applicable for that. Section 23 is public offer. This is about private placement. So private placement, if you want to issue any person, you should first identify by the board of directors. It is not directors, it is board of directors. Everybody put together has to decide it by passing a board resolution. Once you identify the person, you should issue an application letter along with the or this invitation letter, and within that they should make an application. Whatever the money you receive, that has to be kept in a separate bank account. You can't utilize for anything other than for two purposes. Either you allot the shares, put it under company account, use it for any purpose. You don't allot the shares, within 60 days from the date of receipt of money, you should refund the money within 15 days. You can't refund. From 60th day, you pay the interest at 12% per annum. Again, before issue of the securities, you file with the ROC that board resolution, special resolution and matters everything, and after that return of allotment and everything has to be filed with ROC. These are the things which are there with respect to section 42. Understood? And whenever you count 200, QIBs and ESOPs are not included. They have to be excluded. Then two more provisions. Variation of terms and irregular allotment. What do you mean by variation of terms? For example, whenever you issue the shares, consider preference shares, you issued at 10% dividend shares, because preference shares rate is always fixed. But after 1 year, you want to change it as 8%. That means you are varying the rights of the shareholders. Then irregular allotment. In that case, company cannot vary the terms of or objects of the prospectus without SR passed via postal ballot. That means when you are touching the members' money or members' rights, first ask the members are they okay with or not. First you should give the notice for special resolution must include original purpose, total money raised, money utilized, unutilized money, proposed variation, justification or time frame. They can ask this also only as 5 marks question, this point. Whenever company want to vary the terms of the object of the money which is raised, they have to pass a special resolution via postal ballot. Whenever they are giving notice for special resolution, that means you are asking the members to pass a special resolution. How whenever you are asking, you should give the notice 21 days clear notice that they have to come to the meeting. In the notice only have to give something, these details. First one is what is the original purpose. Then total money raised. That means I raised money for building, that is purpose. How much? 10 crore rupees. How much you utilized? Money utilized. Sir, I spent 9 crore rupees is money utilized. After that, how much is the unutilized money? Unutilized money. Sir, that is 2 crore rupees. 8 crore spent, 2 crore is still pending. Then, what is the variation? Proposed variation. Why it is proposed? Because in the future they want to do it. Sir, we want to use it for buying some other equipment. Then, what is the justification? Sir, justification is, sir, building is completed, everything is done, 2 crore extra there. Then, what is the time frame by which then proposed variation will be completed? By which time you will purchase the machinery? That has to be given. 1, 2, 3, 4, 5, 6, 7 variations has to be given. So, 7 details has to be given in the notice of member. See, look at the language. Must include compulsorily. Then irregular allotment. Sorry, okay. Whatever you give it to the members by notice, you have to publish that in the 2 newspaper, English and vernacular. and company website also. Exit offer to dissenting shareholders at the price specified by SEBI, and company cannot use the funds raised to buy or trade in the equity securities of listed company. It is an MCQ point. Sir, I raised the money for buying the building, but I am spending that money for buying the shares and selling the shares in the stock market. No, you can't do that. Because your business is not to buy and sell the shares. Your business is to do something else. Buy the goods, sell the goods, so that you have to be done. That is an MCQ point. So variation terms, very important section. They can ask this also for 5 marks. Notice and this entire thing. Whenever the company want to vary the terms of issue, then what is the procedure? First of all, it has to give the notice for special resolution that consists of 7 points. What is the original purpose? What is the original money raised? How much you utilized? How much you unutilized? What is the proposed variation? How much? What is the justification and what is the time frame by which you want to complete? And whenever you give the notice, that notice has to be published in 2 newspapers, and you should put it in a company website also. Again, once it is done, you should if somebody is dissenting shareholders, you give the option to exit for them. Then company cannot use that money which is raised for the purpose of any business of the company for buying and selling of the shares of other companies. Sir, can they buy? Sir, they are telling other listed company, can they buy their own shares? First of all, that is prohibited in other sections. I think section 69. I don't exactly remember. It is prohibited in some other section. You can't touch your shares only. First of all, your subsidiary is also not allowed to touch your shares. Only thing where you can touch your share is 68. That is buyback of the securities. Except that you can't touch your shares. Then irregular allotment. Sir, what is irregular allotment? Whatever we discussed, you just don't need to read also there. For example, whenever you issue the shares, first you issue the prospectus. Prospectus should contain all the details. If you issue the prospectus without such details, that is also irregular allotment. Sir, you did not issue the prospectus, that is also irregular allotment. Or you issued something misleading or misstatement prospectus, or minimum subscription is not happened, or allotment money, those things whatever we discussed, if the things are not satisfied, that is called as irregular allotment. Allotment is irregular if no prospectus is issued as per section 23. Prospectus is invalid, misleading, faulty, or missing required details. Prospectus not filed with ROC. Minimum subscription not received. Minimum application money less than 5% of nominal value, that is face value, or 25% of issue price of SEBI not received, or listing approval not obtained from RSC. If any of the earlier thing is not completed, that is irregular allotment. Last section which we are supposed to discuss is 41, global depository receipts. So what is this global depository receipt? As I discussed with the example, that global depository receipt. See, whenever an Indian company want to issue shares to the foreigners, that can't directly issue the shares to the foreigners. That have one option. That they can go to some bank. For example, I'll take Reliance want to issue the share. Where is the Reliance? Mumbai. Now it want to issue share to people, some public of USA. Pakistan. ಯಾಕೋ why specifically Russia? Huh? Listen. Now Reliance company directly cannot issue the shares to the public of the USA. That is why what it does is, it goes to the SBI, which is there in Mumbai, and tells that, see SBI, you take my share. You take my shares, you keep those shares, and I want you to tell your one of the branch which is there in USA to issue some securities, to the foreign people. Or what is that securities? These shares cannot be directly issued by this SBI USA to public. Shares can't be issued, because if the shares can be issued, airlines could have been directly issued, because of which SBI USA will issue something called as DR, depository receipt. In this case, it is GDR. It is like you are giving the equivalent amount of shares. Sir, there is so much of calculation which we do it in AFM, Advanced Financial Management CFA final. For example, Whenever I want to issue the shares, consider 1000 rupees is the share price in Reliance. I gave 1 lakh shares to the SBI Mumbai. 1 lakh shares into 1000 is 1000 lakhs. That is 10 crore rupees happened. But whenever I receive money from the public of USA, they don't give the rupees. They give the dollars. And 1 GDR is not equal to 1 share. 1 GDR is maybe 2 shares, maybe 3 shares. The company and the custodian will decide that. So consider 3 shares equal to 1 GDR. That means 1 share equal to 3000 here. Sorry, at 1000, 3 shares equal to 3000. So 3000 rupees divided by 90 rupees is the dollar rate. For example, 3000 divided by 90. How much it happens? I thought you calculated. 3000 divided by 90. 33.33. That means for every GDR, the public will pay 33.33 rupees. 33.33 dollars. Again, whenever they receive, the bank will deduct its commission, maybe 1% or 2%, and the remaining money that will be sent back to the airlines. So this is called as GDR, Global Deposit Receipts. Now, when some compliance part is there, when these people, public of USA now have GDR, not shares of USA, Reliance Company. Now Reliance Company called an AGM, annual general meeting. Here 1 lakh shares are there. Who will vote on that 1 lakh shares? Legally or at least conceptually, this public should vote because they gave the money for that. But on paper, they gave money not for shares, they gave money for GDRs. But shares are with the Indian custodian only. So State Bank of India Mumbai will come to the AGM and they will vote on behalf of this shareholder. If these shareholders want to sell that, they will come to SBI Mumbai, surrender the GDR, convert that into share, then they will sell it in the Indian market or give it to the public bank, then they will go away. So unless until they convert their GDRs into shares, they won't get the voting right, they can't sell the shares. That is the main purpose of GDR. So global deposit receipt is created by a foreign depository outside India. That means SBI USA. Authorized by a company to issue such receipts. That means Indian Reliance. It is a certificate issued by a depository bank representing the shares of a foreign company on a local exchange. See, that means for SBI USA, Reliance is a foreign company. You have to think from that point, and you are not thinking from Indian point, because certificates are issued by SBI USA. For SBI USA, Indian company is foreign company, and it is issued on a local exchange. Local exchange means USA exchange is local exchange for them. Then a company may issue GDRs in foreign countries. After what? Special resolution in GM. Which GM? Any GM, maybe AGM or EGM. It's up to the company. Prescribed conditions have to be met and can be issued via public offer, private placement, other permitted methods also. And can be listed and traded abroad. That means you can't list in India, you can list in USA Stock Exchange as GDRs. And underlying shares are held in the name of Overseas Depository Bank, which issues the GDR. That means SBI India will have the shares, but the ownership of that shares will be with SBI USA. Then GDRs holders get voting rights only after conversion into shares. That means you surrender the GDR, get the shares, you get the voting right. Until the conversion, Overseas Depository votes on behalf of the GDR holder as per the agreement between depository, GDR holders and company, everything. This is about GDR. This can also be asked in examination, but very rare. Yes. If you purchase in India, okay, okay. No, if you want to exercise the voting rights and all, you should go there, sell that means surrender the GDR to the issuing bank. You get the shares, then you can sell it, or you can exercise the voting right. It is just like you want the foreign bank. That means your bank that is connected. Please go through that. I'll give 2 minutes. Please go through the entire thing. Mainly first go through the exam key tips. Unless if you want, you can take a screenshot of it. I feel I have more my heart towards this exam key tips rather than the summary notes. I actually feel this is very good. I never thought of doing this, but AI did this with. I told I want something which is very very useful for examination. Then they gave a suggestion. We improvised, and did this thing. I have even done the audit notes also. Uh, I am doing it from last one month, not 1 month, 45 days for both the subjects. First 15 days went on so much of understanding things only. How much content has to be cut, how much content has to keep for this. Actually, I wanted to make it under 100 pages. I felt it will be too much of trimming of content. For the next version, I'll check. You should be too quick to go through it. Don't waste too much time. Then look at the question bank. The first question which is being asked from Jan 26 exam, I think section 27, variation in terms. Amrit Prakash Limited issued 10 lakh shares of 10 each at par. At par means face value. The prospectus specified funds would be used for manufacturing and distributing mobile accessories. 8 lakh shares were subscribed, that is 80 lakh received. Directors now want to use 80 lakh rupees for manufacturing of life-saving drugs instead of what? Instead of mobile accessories. Examine whether the company is allowed to use the funds for the purpose of other than that mentioned in the prospectus. First of all, 2 points are there, but they asked only 1 point. This issue itself is invalid because 90% has to be subscribed. They subscribed only 8 lakh out of 10 lakh. It issue only wrong, but they are not focusing on that. They are focusing on section 27. Yes, they can use it. Pass a board resolution, pass a special resolution, file it with ROC. Then whenever you are passing a special resolution and giving a notice, you should specify 7 points. What is the original purpose, amount raised, what is the utilized, what is the unutilized amount, what is the proposed purpose, justification, and time frame by which you utilize. 7 purpose you have to use. Then again, what is it? After all those things, you should file with ROC. That is the what they are asking. That is for 5 marks. They are asking, examine whether company is allowed to use funds for purpose other than mentioned in prospectus. Yes, it is usable. As per section 27, you should write the provision. First, you should write the provision. Section 27, whatever I discussed now, then write the facts. In the given case, out of 10 lakh, 8 lakh issued. In the last, write the conclusion as it can be used, but give a note separately. That issue itself is invalid because less than 95% of the subscription is done. Don't write this in the first point. They consider that none test madak barte ante I say then will test your life. Don't do that. If they tell something as like humans has 4 legs, yes, you tell. You want to tell it as to follow whatever they tell, go to the top, then change it. Unless you can't fight without any power. So again, question number Jan 26 only. Again, they asked one more question: private placement, 200 limit rights issue. That is what they ask. Private Limited made a private placement offer to 205 persons, including 5 QIBs and 10 ESOPs. Is it within the limit? That means for counting 200 QIB and ESOP are excluded. 205 minus 5 minus 10. That means 190 they issued. That is valid. It also sent a rights notice, issue notice 2 days before opening. 94% of the members given written consent for short notice. First of all, it is connected with some other point which we will discuss in chapter 7. Whenever you want to go for shorter notice, at least 95% of the thing has to be powered. Decide whether the private placement to 205% violates the 200% threshold under section 42. No. Don't write this direct as no. As per section 42 of the Companies Act 2013, private placement can be made to 200 people in a financial year, but however, counting 200 people, QIBs and ESOPs are excluded. This is a general provision. And start writing the facts and conclusion. Second is whether the rights issued is valid. Given 2 days short notice with 95% of written consent. No, it is not valid. It has to be for 95%. I'll check whether that is right or wrong. That is for only section 8 company. Not reduced. The valid days only 14 days. For section 8 company, you want to go for less than 14 days. For normal company, you want to go for less than 21 days. Then shorter, we call it a shorter notice. Approved by 95% for less than 21 days notice or less than 14 days notice. 14 days notice is legal time given. 21 days notice is legal time given. Other than 20, less than 21, less than 14, then 95% of the shareholders who are holding total voting power has to approve it in writing. Sorry? One day also you can do it, no problem. What is the question number 3.1, right? Section 27 of the Companies Act 2013, a company shall not vary terms of any contract referred in prospectus or objects for which prospectus was issued. Okay, first you should write this line. A company cannot vary any of the things except subject to the approval of the shareholders by a special resolution. The notice of the general meeting must published simultaneously in the newspaper, English and vernacular, and to keep it in the website also. Any unutilized money from the prospectus must be kept in a separate bank account. In the given case, directors cannot use 80 lakhs for life-saving drugs without following section 27 procedure. I think they shortened the answer, but you have to write some more things. That if you, because it is 5 marks, write that details also, 7 details. Actually, they should give answers on a neutral basis, but they give directly on conclusion basis, because they told directly you can't issue it. Oh. We sub 10, it sent right notice 2 days before opening, 94 days giving written consent whether company. First one, right? First one, we discussed what? First one, right? First one. Issued manufacturing, distributing their accessories. First would use manufacturing instant. Now lacks manufacturer licensing instead. Okay. They're telling here why they did it as directors now want to use 80 lakhs for manufacturing life saving drugs instead. That means what is the procedure if they ask, they would have write that. That is why when they tell that now want to use, that means they decided they want to use, because of which it is, they told it is not possible to use it. Private placement also okay. Offer of for sale of shares, that is section 28. We can go through previous year. Comment on the following with reference to the Companies Act 2013. Disclosure required to be made on the face of the prospectus. What disclosure? Two disclosures has to be made. What are those? Prospectus has been filed with ROC and it should be signed and dated. All those two disclosures has to be disclosed in the face of prospectus. Conditions in regard to expert statement. Expert statement. You should take a written consent of the expert. Expert can be CA, CMA, any person, and you should not withdraw that consent. Then date of publication of prospectus. How many days before you have to publish the prospectus? At least 3 days before. Then depositor not share application, director's loan and install thing. 5 marks question in May 25. Last attempt. State whether the following amounts constitute the deposit. Okay, I think it is based on one more chapter. It is consisting of two things. You can read it once we discuss the deposit. Variation of the objectives, again section 27 they asked in Jan 25, Jan 26 they asked, Jan 25 they are asking, same thing only. Again, what is this? 102 lakhs, 100 plus 2 premium, proposed specifying life saving drugs, same question only, see here. In August, board passed resolutions in 6 software and 5 lakhs in equity shares of X Limited. First of all, see, okay, we'll read the question. X PKR Limited issued 1 lakh shares of 102 each. Generally, I am concerned about 100 lakhs. That's it. Under the prospectus specifying the funds for manufacturing life-saving drugs. Purpose was earlier life-saving drugs. Now, in August 24, board passed a resolution. Board, not special resolution, to invest 6 lakhs in AI software and 5 lakhs in equity shares of X Limited. First of all, this 5 lakhs is not permissible at only. With the special resolution, without the special resolution, not possible. But the above thing with special resolution, it is possible. Shareholders objected. Objected means they did not pass a special resolution. The resolution lacked the required majority. That means 75% was not there. Notice not published in the newspaper, English newspaper, vernacular newspaper, and website also not done. Investment in X Limited equity shares is illegal. Decide whether the shareholders' contentions are tenable. Yes, they are 100% right. We should write the entire provision with respect to mainly 3 things. Change of object, then publication of newspaper, and investment in the other company share. All the things are not possible. Very conceptual question. If you don't know section 27, you can't write only. Then private placement is okay. Then again variation of objects only. But it is in RTP May 26. Your attempt RTP only. Read it and tell me. Same question I think Jan 25 question only they are asking here. But no number is not given there. Investing significant funds in equity shares of other companies. Special resolution was recommended. Some shareholders expressed concerns. Advise on the validity of proposal to redirect the funds. No, that is not possible. You write section 27 fully. Mark section 27 is very important only. Continuously write testing. Then share application money. You should keep it in a separate bank account. Use it for only two purposes. Those things has to be written here. That is also RTP May 26. You read it and tell me. What is it? Tell me somebody what is it? What is the question is about? I think it is connected to deposit chapter also. See, I did not read the question. Okay, tell me. Hello. Hmm? ಕ್ವಶನ್ ಏನ್ ಮೇಲೆ ಫೋಕಸ್ ಮಾಡ್ತಾ ಇದೆ? ರೀಫಂಡ್ ಆಫ್ ಮನಿ ವಿತಿನ್ 60 ಡೇಸ್ ಒಳಗಡೆ ಶೇರ್ಸ್ ಅಲಾಟ್ ಆಗಿಲ್ಲ ಅದು ಅದಿದೆಯಾ ಮೇನ್? ಬಟ್ ಫೇಲ್ ಟು ಅಲಾಟ್ ದ ಶೇರ್ಸ್ ವಿತಿನ್ ದ ಪ್ರಿಸ್ಕ್ರೈಬ್ ಟೈಮ್. ಪ್ರಿಸ್ಕ್ರೈಬ್ ಟೈಮ್ ಇನ್ 60 ಡೇಸ್. Then you should refund the money within 15 days. If you don't refund the money within 15 days, again 15% interest. But there is one more condition which is there in deposit chapter. From the 61st day only, share application money, whatever it is pending allotment, is considered as deposit. That is what it is there. Once we read the deposit, the same question might be there in the chapter. Public offer. Okay. One more point is there here based on dematerialization. RTP May 25 is there. Whenever the company wants to issue the shares, compulsory it has to issue the shares in a demat form only. It can't issue in a physical format. Then FEMA related question is there here. We will see it. Private placement again, resolution, maximum persons allotment. The similar thing. Resolution has to be special resolution. Maximum persons is 200, but exclude QIB and ESOPs. And allotment within 60 days. If not, refund within 50 days. If not, interest at 12% per annum from 61st day. This is MTP question. Again, private placement MTP 5 questions. This is about, these are how many? 15 questions are there. Only 15 questions. Huh? Yes, 15 questions. Shall we stop here? Shall we do one more chapter? If we do one more chapter, at least it will take an hour. We will see some more questions, then we will wind up. You want any questions to be discussed? This 315 you see. Sutti Ceramics Private Limited, SCPL, manufactures crockery items. One day someone. The company needs funds of around 500 lakhs, 5 crores for expansion. The company does not want to convert itself from private to public company. Okay. It explored raising funds by issue of right shares to the existing shareholders. Can a private company issue the right shares? Yes or no? Yes, it can be issued right shares. However, only 100 lakhs could be generated by way of that right shares. Referring to the provisions of Companies Act 2013, advise SCPL whether company can raise further funds through private placement issue. If so, are there any limit for fresh issue and the time limit for allotment of securities? You have to again explain section 42 only. You should explain mainly 42. As per section 42, private placement, a private company can issue raise the money by way of issue of shares through private placement, rights issue, bonus issue. And whenever the company want to issue shares through private placement or rights issue, okay, rights issue that can be done when it want to issue the shares to through private placement. First of all, it has to pass the board resolution. Special resolution has to be passed authorizing issue of private placement. Then maximum number of members that can be issued to a private placement is 200. While counting 200, exclude those two people. And once it is issued and allotted, file with the ROC again one more time. Later, what is asking are the time limits. And whenever the company receives money, application money for private placement, within 60 days they have to allot the shares. If the shares are allotted after if the company cannot allot the shares within 60 days, then refund within 15 days. If the refund is not done within 15 days, from the 61st day, refund the money along with the 12% interest per annum. This thing has to be there, 3.15. 12. For public offer, 15 percentage. For private placement, 12. See, 42 ending with 2. That is why interest is at 2, also ending at 2. So you should remember some or the other way you should remember. No option. Na? 42, 12. They gave the gist of answer. You just read it. See, here they use the word from the expiry of the 60th day. That means 60th day expires and 61st day starts. Either you write it as from 61st day or on the expiry of 60 days. Or you write on the expiry of 60 days in brackets from 61st day. You don't want to take the risk. Because they should not deduct. Some illiterate people also will be there in valuation. In suggested answer, they wrote 60 days. They don't read this expiry of 60 days. They just read 60 days and you write 61st day. 60 and 61st is not matching, then gone. Better answer is from the expiry of 60 days in bracket from 61st day. Yes. Question number 10 answer. Deemed deposits. I think we discussed this question above. RS received a share application money 50 lakhs on 1625 but failed to allot the shares within the prescribed time, that is 60 days. The shares application money of 5 lakh rupees received from Mr. Khanna, a customer, was refunded by way of a book adjustment towards the dues payable by him to the company on 3725. 3725 means 60 days. June month has 30 days, July has 30. 30 plus 30 60. Okay. That means Khanna, who paid 5 lakh rupees to buy the shares, shares are not allotted. Then what they have to do? Refund the money. Instead of refunding the money, Khanna was supposed to give the company 5 lakh rupees. Earlier, some Sala Tavandribekela, some credit sales has been done for Khanna. Now they adjusted for book dates and they did it on 37. The company secretary reported that entire 50 lakh shall be deemed to be deposits. Examine the validity of the company secretary's report. What do you feel? I feel when I say the word refund, that has to be given back. If that is not being given back, if they want to adjust, yes, they can adjust with the approval of the member, person who are supposed to give it. Now, is it company secretary's opinion correct or not? As per me, it is correct. As per me, it is partly correct. As per me, it is partly wrong. Or why it is partly correct? Because there is absence of question. We should make an assumption. Considering they have obtained the approval from the Khanna for adjusting that as to book dates, it is considered as wrong company secretary, because 5 lakh when it is adjusted, it is like refunded to the Khanna. Remaining 45 lakh rupees has to be treated as deposits. If not, again 50 lakh tenable is there. You can write both the answers. I feel like this adjustment of 5 lakh is right, and remaining 45 lakh has to be treated in the this thing. I feel, but my feelings has no value here also, personally also. 3.10, right? As per the provision. That is what we are saying now, as per the provisions only. As per the provision, it is company secretary is tenable. That means they should not adjust unless until they have the consent of him. Because the consent part is not there, that is correct. Share application money allotment not deposits within 60 days not allotted. Refund within 15 days. If not, the amount shall become a deposit. In the given case, 50 lakh received, etc., not allotted within 60 days. 31/7 they should allot. Not refunded within 50 days. That is 31/7 plus 15 days. Therefore, entire 50 lakh become deposits from 31/7/25. Book adjustments. The refund of 5 lakh by book adjustments against the dues payable by Khanna is not valid refund, because refund means giving back. Any adjustment of amount for any other purpose shall not be treated as refund under these rules. Refund means you see, they told whenever you make an application and pay the money to the bank company, they should keep it in a separate account. They should use it for only two purposes: allot the shares or refund the money. Only two purposes. You can't adjust for some other purpose. Yes, right only. They can't adjust for some other purpose. No need to take the assumption. The right answer is they can't adjust. They have to refund it again. They have to get it for the normal account as adjustment of 5 lakhs. Hence, 5 lakh also remains part of deemed deposit. The company secretary reports that entire 50 lakh is deemed deposit. That's correct. Yes. Normal shares are also 60 days plus 15 days. So 30 days. The amount becoming deposit in the given case. See, public company can also do private placement, public offer also, but here mention agilla. Let me read question 310, right? Why they might have taken as 60 days is because the person is specified. They might have taken identified Khanna as a person and they might have allotted. I feel that is assumption. By way of book adjustment towards him, the company secretary reported 50 lakhs will be treated in deposit. They treated because of that only, that is private placement. If it is that thing, subscription means it is 30 days issue the from the issue of prospectus, you should allot the share. This is not wait. Actually, 60 days and 15 days only correct. Look at the difference here. If the minimum subscription is not met within 30 days, what do you mean by the difference? There also, here also, consider I issued the shares on 1/1/26. Now I issued the applications within 30 days. If I don't get 90% of the applications back, then close the not going for allotment. Close the issue of shares only and refund within 15 days. But you received the application 90%. Within 60 days, you should allot the shares. This is for allotment. If you don't allot within 60 days, then next 15 days, refund with 12% interest. So here, from the date of application till the allotment, 15% interest comes. From the date of allotment, if you don't allot within next 60 days, then 12% interest comes. That is the difference I feel. Both the cases, it is 60 days only. Understood the difference here also? This is for subscription within 30 days. That is for allotment 60 days. 60 days only, both the case. If you have any other things, you can ask. Go to see, we discussed 3 chapters. Tomorrow we might discuss what is the 4th one? Share capital and debentures, right? Tomorrow period time, we can discuss the share capital. I think we can also discuss tomorrow also 3 chapters. 3 means 4, 5, 6, then 7, 8, 9, 10. 3 days amugita. No. Huh? We will see. That takes some 15-20 minutes. No, I don't know. Huh? We will see tomorrow. If we come tomorrow immediately, we will do 4, 5, 6, 8. Because management is very important, we'll keep it up fresh in the next day morning. And accounts and auditor. Then we have some 3 chapters again. We will see 3 days or 4 days. I need 20 hours. I know that it can be completed in 20 hours, but break and all those things are there here. We will see, sir. No. Energy also gets drained. It is not regular class. We discuss these 3 things for some 1 week or 10 days in regular class. Now, here 2 things are there. One, my mind is working like machine. That gets like now I am adjusted. But if not, that gets drained. And physical energy also. We eat one single idli and half rice and come and do this. Is it protein or what? The carbs and all those things not support the body. Do revise the chapters. If you feel anything left out or anything is you have any doubts, mark it out and ask in the tomorrow's class. That's it. See, to whatever you have written now, what is this? Prospectus in the which chapter? Which paper this is? May 25. Prospectus ಇದ್ರಲ್ಲಿ ಹಂಗಾದ್ರೆ May 25 question ಅಲ್ಲ? What is the question? Stock services. May 25. No, not there. That is connected to some other point also. No? Stock Services Limited issued a prospectus inviting a public offer of securities on 18 June 24. The prospectus mentioned Mr. T is one of the director of the company. T is a famous social worker who helps in educating poor children in Rajasthan. The prospectus also mentioned that certain percentage of funds raised will be utilized towards the community services. Mr. C was impressed by these statements and subscribed to the shares of the company. He was allotted 1000 shares of the company. He subsequently sold 250 shares to Mr. D. On 15, he came to know he was not a director. And company never had any intention of doing community service. Misstatement in the prospectus, inducing people to participate in that. C and D want to resign the contract, referring to the provisions of Companies Act 2013. He can resign the contract. Yes, he can resign the contract, I feel. 1B, right? You're wrong. Prospectus issued to circulating distributed includes any statement which is untrue or misleading in the form of context in which it was included, which any inclusion or omission mattered likely to mislead every person who authorizes the issue. Such person shall be 447. Right of recession is also there. The exceptions is subsequent transfer is not allowed. Then one more is also there. Here that is not available because he cannot resign the contract. Uh, why? Because in the question, what is that? Director purchased 1,000 shares. He purchased from the director. He did not purchase from the company because that means second the purchase. That is why it is he can't resign the contract. Yes. 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 Online. If you also have any doubts, you can drop the questions in the comment box. We'll reply that. So we'll wind up the class here. We will see you in tomorrow's class with next chapter and subsequent question banks. Till then, take care. Bye bye.